topic common pitfall on GSTR 9 and 9C filing. We heartily welcome our speaker Prasanna Krishnan sir to occupy dais. I request all to rise for our CA motto song.
सुप्तेषु जागृति य एष सुप्तेषु जागृति कामं 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 कामुषो पुरुषो निर्विमाणः तदेव शुक्रं ब्रह्मा
Please be seated. Also video will be played.
Arthashastram, Dharmashastram cha. Meaning, economic principles, Arth, and ethical considerations, Dharma, which are central to the work of accountants. The entire world is deliberating about the impact of climate change coupled with disruptions of artificial intelligence. India has given philosophy of Vasudhaiva Kutumbakam to the world and successfully hosted G20 summit on this theme and also launched Global Biofuels Alliance. The accounting profession also has an enormous responsibility to guide the work, where accountability meets innovation so that vision can be converted into solution. The Institute of Chartered Accountants of India, being the world's largest accounting body after the successful hosting of WCOA 2022 and GLOPAC, proudly presents before the World Forum of Accountants 2025. Where accountability meets innovation for a sustainable planet. The world's brightest minds will exchange insights, explore emerging trends, and unlock the possibilities for the profession, where foundation will be laid to shape the vision for the future of accounting profession. Hosted at Yashobhumi, the largest convention and exhibition center in the heart of India's capital, New Delhi, inaugurated by the Honorable Prime Minister Shri Narendra Modi, is all set to host the congregation of accountants from around the world. And while you're here, experience the vibrant culture and heritage of New Delhi, a city where history meets modernity, offering unforgettable memories.
World Forum of Accountants, an experience of 3 days, insightful discussion, groundbreaking innovations, and unparalleled networking opportunities.
With immense pride, we invite you to WOFA 2025, taking place, happening from January 31st to February 2nd, 2025, at the magnificent Yashobhumi, New Delhi. Experience 3 days of insightful discussions, groundbreaking innovations, and unparalleled networking opportunities. World Forum of Accountants 2025 is where you need to be, where accountability meets innovation, AI for a sustainable planet. Join us at WOFA 2025 from January 31st to February 2nd, 2025 at Yashobhumi, New Delhi. For more details, visit wofa.icai.org.
It's my pleasure to introduce CA Prasanna Krishnan sir. Is the founder partner of the Chennai-based firm of practicing chartered accountant. His specialization in the field of indirect tax, especially GST and customs. He has represented to government, for example, on invitation from Tax Research Unit and Ministry of Finance by June 2009. He represented All India Tourist Bus Owner Association in 2 rounds of submission before the CPE, Ministry of Finance, obtained successfully the exemption setting right the disparity in taxation for point-to-point bus service operated all over the country. His suggestion relating to customized compound levy scheme has been acknowledged by the Honorable Chief Minister Office on 24 July 2015 for favorable consideration while implementing in stage the GST Act in India. In January 2018, accepting his representation on contradiction between GST circular and GST notification, the CBIC Ministry of Finance, Government of India issued Corrigentum Circular dated 18th Jan 2018 confirmed relief to college meals or food joint. In Finance Act 2019, a major part of his suggestion to set right the unintended denial of exemption from GST registration for goods vendor has been duly considered by Government of India, benefiting lakhs of such taxpayers. He is a professional who delivers lecture at various government forums, including Regional Training Institute of Control and Audit General, National Academy of Customs, Excise and Narcotics, General Commercial Taxes, State Training Institute, Tamil Nadu. His views during the official training session used by CNAG CR South Zone cast productive observation on tax on education institutions to tune of about rupees 19.2 crore to the central revenue reported in AGAR 2016. He has given series of revenues and has participated in tax law related discussion on various television programs. He has delivered several lectures on various topics, especially on indirect tax law, in various workshops, seminars conducted by education and professional institution, university and research center. He is a founder member of few non-profit academic society focusing on indirect tax related academic activities as well as social service. Thank you for your presence, sir. I hope your valuable insight into the topic will beneficial to our members. Thank you, sir. I request Pradeep Kumar, sir, to present shawl and memento to our speakers.
Brothers and sisters, good evening. Just met a friend after a while before arriving this venue. He's a very frankly speaking man. That's the biggest problem with him, and that is the biggest advantage with him also, of course. Just started very casually to talk and say that, oh no sir, this Monday and myself are having some problem always. Last but one Monday, sir, I missed my flight and there was a big mess. And last Monday, sir, I was about to buy a property, some mess was there, I could not see that it is registered. And anyway, sir, you are going to deliver lecture today, right? Yeah. This is the biggest problem with this kind of people. Extremely honest, brutally honest. I said, that, sir, do you mean this? No, I'm just asking you, are you going to deliver lecture? Yes, sir. And today is Monday, right? He told. That is not necessary, in fact. At least if he has just missed that sentence, it's okay. I don't know. Okay, this is always that. And you know, your experience, of course, by God's grace, will be good, I believe. Coming to this topic, about 7 years gone, we are reasonably used to do GSTR 9, 9C. It's okay, fine. It's always that. Some basics are already settled. Still, this topic is very green. Still not regretted. So this topic is still having some serious matters to be discussed, especially by professionals. The biggest problem here is we have believed that having seen about 6-7 years of experience or something like that, there is no big harm left out yet, and reasonably it is seen by us, and reasonably we are settled with that. It is a belief actually. But the problem here is, among ourselves, if we are discussing in that, we do have a lot of matters to observe. So I am having a design of this lecture in such a way, to a kind permission, to see that only 5 to 6% of my time given may be spent for some rudiments. Kindly bear with me for those very few minutes. Maybe as far as GSTR 9 is concerned, I am going to spend about some 65 minutes plus, of which hardly about 3-4 minutes may be spent for beginners, if any here. Again, I am planning about some 80 minutes plus, 80, plus for GSTR 9C, between 6 to 7:30, where I will, with your kind permission again, somewhere around 4 to 5 minutes time or 6 minutes time, I will be spending here and there as to the basics. Maybe those who are settled with the basics may slightly get bored, of course. That few minutes only. And in my kindly this case, excuse for one simple reason, we'll see that our brothers and sisters who are there as beginners coming here will also come and join in our discussion comfortably. If I'm missing that, they will be having some gap. They will not be able to join with us. So only for a few minutes, you may kindly excuse. There will be not a continuous one. Somewhere 30 seconds or 10 seconds, 15 seconds, that's what will be spread here and there. Otherwise, you will not feel much uncomfortable. And at least you can be feeling that your knowledge, what is there, is confirmed. That way you can be still happy, right? Now, coming to this one, annual returns, who should file? So, starting, who should file? Who are all registered should file. Who are all registered should file is the next question. See, basically, you have one section to refer this one, and you do have some other guidance also. But the question is getting importance on one point. What is the number you need to count? Why I need to count, sir? GST return is filed throughout the year. It gives a number, and I know very well, all the 7 years I have seen, whatever I have filed is coming out as GSTR 9. Why I should think much about that one? They are giving a threshold limit, that's all fine. Now the question is, if there is an exempted income missed out by somebody in the monthly return. These are all the things I told that beginners may be interested to first learn this and behind it. It's only the next 20-15 seconds maximum. If it is left out, whether you have to decide including that amount or excluding that amount. After all exempted. Say something like a fixed deposit interest. Say something like a small income relating to an exempted category of some electricity board income generated, something like whatever it is. So what to be decided and how to decide this relevant threshold limit for GSTR 9 is a question. Just to continue our discussion. One, registered person only naturally should be going for it, and registered person has got no business here, and he is taking his own risk. For that matter, who is the registered person has been told. Who are all registered under section 25, that's all. There is nothing serious about it, and he is a registered person. And whether a TDS return related person will not come there, because it's after all section 52, section 51 cases and all. It will not be coming there. We are talking about outward supply related registration only. Right. Then, having said that one, what will be the exclusion parties, excluded parties? These days will be excluded. A taxpayer under 51, for the purpose of that, he has to do a TDS, or he may be doing a TCS, tax collection at source only in that case, or maybe a ISD party, inputs service distributor will be there. He may be having registration, but doesn't require per se because of ISD registration. Otherwise, if he is outward supply, then it's okay. But ISD registration is not warranting him to go for a GSTR 9 filing at all, or a casual taxable person, or a non-resident taxable person. These people are not required, though they are registered, not required to go for any kind of annual return under GSTR 9. So, having said that, the matter is reasonably clear now that we are talking about somebody who are having outward taxable turnover. They do some supply outward, maybe service, maybe goods supply, whatever it is. Now this is how it is. Again, I am telling you, it's little rudiment. Please bear with me for a few seconds. Under the services, under the returns, under the annual return, or having login, you are going to click this annual return. This door is going to open, and you are selecting the year. And having selected the year, you are able to see this blue banded two icons. You click the icon of GSTR 9, it opens. The white circled part is clicked by you, and it opens like this. And here, we are going to say that I am not going to file a nil GSTR 9, so I am going. You may get a doubt. Sir, first, I am not able to appreciate one basic point. You clearly tell that there is some sizable number given there. You are going to come again, maybe in crores you are going to tell. Right. If somebody is having so-called threshold limit crossed by them, then you will ask them to go for a GSTR 9 file. Now, why are you having an option first, the very first option? Do you have a nil return to file? Fine. No. If you say nil, it will become nil and you can file it. So for nil return, why somebody is to file GSTR 9? Any? It's very, very clearly told that when a particular turnover is there, then only you are going to file GSTR 9. Perfect. Then why the lettered GST network website is presenting the designed one by the CPC? It's not by them actually. The form is designed by the CPC. They are giving a form which is saying that it is accommodating a question that do you have a nil GSTR 9? It asks and then it goes. And if you say yes, it will get filed. Why? Any idea? Sorry, somebody was about to say. Sorry.
Its turnover of the company is exceeded. One registration doesn't have any outward supply.
Okay.
They might file in return.
Fine. See, the reply to this one is simply the focus is on the whole company having presence throughout India in various states, multiple states presence. Somebody will be having an annual turnover, let me say even 200 crore rupees also. He may have a registration in Tamil Nadu, maybe with a fake end of, let me say, March. He may have a zero turnover in Tamil Nadu. That doesn't mean that he is going to speak completely in Tamil Nadu because it is also a place where he is supposed to report basically. So there he comes and says, yes, I have to file. But in my state, namely Tamil Nadu, I am having zero. That's the reason why it is there. Right? Now you can understand that. Why are you getting a notice even in case of a nil return? In some cases it happens. We are supposed to see globally or at least nationally and then decide that which state is going to fall under this category. Right. Now this is the screen number 1, what you are going inside. You showing some numbers and all what? Yeah. All are auto-populated. All are auto-populated. There are some 4 major areas where you need to touch. Right? But otherwise it is auto-populated. As you sow, so you reap. Whatever you have filed in your monthly return will directly come here. Whatever is there in your 2B will be coming here and shown to you. And it is you to decide that how you are going to present, accept, delay, modify, whatever it is. So now this is the screen what you are going to see when you are trying to open the GSTR 9. And 1, 2, 3 paragraphs are not quite serious. They are all auto-populated with the name, the general details, this and number, GST number. That's not serious. Para 4 is the real starting point of this matter actually. Is it visible for those who are sitting in the last lines? I try my level best to do a kind of simple thing. I think it is visible. Also you can slightly come. There are some still blank seats. I think more than 25 seats are blank, left out bracket. Okay. If somebody is feeling uncomfortable, please come forward actually. Now coming to this one. This is how the screen is going to appear when you are starting your work. And these are all the numbers what you are having here. So can I edit these things? Mostly editable, mostly. Unless I am saying in specific, mostly editable. Then we have to edit, okay, but why I have to edit? Just few seconds back you told that whatever I have filed in my monthly return will directly come here. Having noted from you that whatever I have filed will be auto-generated here, what is the need logically to go inside and make a correction? Very simple. Nothing to discuss in detail. You filed something in GSTR, monthly GSTR, which is not acceptable for you. Oh, fine. If I have done something wrongly, I can directly go into GSTR 9 and make any change and comfortably do it. Please see the red color band. Able to read it? You may have some difficulty. I will just tell you. It reads that if you change these numbers upward or downward by 20%, than the present number or existing number, it is going to create some alert in the system. Oh, that's fine, sir. Less than 20% I can do and it will not punish me. That will also be under the scanner. Beyond 20%, if you are doing it, it will be attracting their attention very seriously. Anything what you are changing in GSTR 9 which is a very official summary of your own return, will be definitely reviewed by them. One. If it is too much, that is, what is too much? 20% is the up or down. 20% plus or 20% minus in the existing number when you make it review. This number wise, if you say 20%, machine after all. If there is a number, say for example, the same example I can continue. You did not declare a number, something like exempted turnover from some income tax refund was there. Then therefrom you got an interest of somewhere around a small amount of some 5 lakhs or 10 lakhs. You did not place that here in the monthly return, but you did not have time. Now you want to make it so that it will match. Because next time I'm going to show you 9C. What is the turnover as per the financial statements? You are going to mention a number, which is naturally going to be short by 10 lakh rupees when it is compared with GSTR. So you need to fix this matter here itself so that your journey will be comfortable in 9C. So if you try to do something here, there will be 0 here in the relevant column. You go and place 50 paise. 50 paise, I mean. That will also be treated to be about 20%. So after all number, that doesn't. What you are having is 0, what you are trying to make it is 50 paise, it will show that you are making some correction more than 20%. So, anyway, coming back to this one, if we are having tax liability, you need to take care. There are some 7 major points what I have to discuss in this regard. I will just in the relevant time be discussing. Now coming back to this form first. We are always, our profession is that way. We are always used to do a standard type of working. The working style is there for all of us. Forms are there, we have to respect the form. But substance is very serious. Forms are there, any forms are there. Whatever forms, maybe a court given form, maybe a law given form, maybe a God given form, whatever it is. When it comes to the hands of the professional, forms are respected with due respect. Still, if the substance is not comfortable, it is we to decide that how to present it. That's all. That is where our work is. A form is, these are all for such a type of highly experienced, well-lettered people like you. There is no need for explaining column by column and line by line what is inside the form and what is to be filled up. You can, and much often you can see that it's already filled, auto-filled. So why and where there is a need for a discussion on this point is, there are some cases where there is a need for some insight, much more detailed study and then presenting actually. And if we know the repercussion, what is going to be there on the 9C or in the future, then we will be making our decisions better. Much better decisions can be there. Now coming back to this one. Broadly speaking, what it is trying to present in this para number 4 and para number 5 respectively is turnover, nothing more than it. What is the turnover? And the taxable turnover is arrived at from the broader number. You have presented everything. Taxable, nil rated, a term called as non-GST. What is this, sir? A term as non-GST. You will not see in the legal language exactly what is this non-GST. We understand that what is non-GST. Non-GST means perhaps it may be relating to land sales, perhaps it may be relating to liquor sales, perhaps it may be relating to petrol, diesel, whatever sold by you. Perhaps anything which is not covered under this category, including the insurance or maybe lottery money, whatever it is. So these are all the numbers what we are talking about. And then we use comfortably the word non-GST, right? Coming back to this one. Maybe nil rated, maybe exempted, maybe non-GST, maybe taxable. In the taxable also B2C, B2B, all that. These are all going to be there because all we have presented. All you have presented in our GSTR 1, matchingly in GSTR 3B also. Naturally it will come here. From there only it comes actually. It comes here and the relevant tax are going to be there as out of the plate. Now what is your work here? Number 1, fortunately is it matching? This is the first confirmation you are trying to do. Generally it should match. If you have filed it will match. If your client has filed it, then definitely it will not match. Don't worry. So we have to plan it. That's all that. One of my good friends, I have a lot of good friends who give this kind of comments actually. He is a good friend and in a discussion, he asked me seriously a question. That's the biggest problem with this man actually. Whether he is casually asking or officially asking, we don't know. That's the biggest problem. He asked me, sir, can you list out 3 dangerous enemies for a practicing chartered accountant in India? Chartered accountant in India, practicing chartered accountant in India. Okay, he is meaning something seriously. And we are having some of the contextual understanding, right? So in this situation, why he is asking? I need to think, sir, that is an enemy for us. Sir. We don't create enemies at all. And everybody becomes friend. In fact, a worst GST officer when we are meeting, first time he is fighting, second time he becomes a good friend. Third time he is asking suggestions, sir, what should I do in this matter? I am not able to decide. So that's what is happening there. So that's not the case at all. No. I am seriously asking, there is an answer, you have to tell. I have to tell. Say, fine. 3 enemies. Let me think so. Court can never be an enemy to anybody. It's a friend indeed. Officer already told, there is no one. Whom you are referring to? No. I think you are a very positive man, you cannot tell the reply. Let me tell the reply, he said. And started to list out. Number 1 dangerous enemy, client. 2, client. 3, client. Sir, such a nice manager, very good practice. Sir, why sir? Then he told, the biggest power, sir. Client is a creature sent by the God to the world to ensure that whatever he has to tell to the practicing CA, he will never tell. Exactly whatever he should not tell to the GST officer, perfectly he will tell. Such a type of design he is. What to do? That is how he has been designed. So he will be that way only. Yeah, that is his own command actually. But very good man. Coming back to this one. Here if it is filled up by your client, and another excellent character is accountant. So the accountant of late 90s or maybe in the early 2000s, I have met them in my very young age, very young age actually. Great people actually. That kind of people are amazing. Half a CA there. And whatever information you would like to make them to recall over a normal trunk call, you can just get from them. You will be there somewhere in a court. You can just come to a PCO, give a call to their landline, make the man to come in the landline and ask him that, sir, so-and-so date, somewhere in the month of June or July. Is there any transaction relating to? No transaction at all, sir. I think there are some 2 credit notes. One is relating to goods return and another is relating to, I think, rate difference, sir. I think. So approximately somewhere this number and this number. I think it may be somewhere in June or July, sir. You can believe it. In few minutes, I will just send the fax. It will come. Exactly in June and July, that man, what you told is right. You will get a copy. You will win the case. You can believe. Now there is no character called as accountant at all. Those who are doing accountancy job, if they have to be named as accountant, you can call them as accountant today. Those accountant, we don't know. Something is big change is there. We don't have this forum for discussing that matter, but all of you would have already come across this kind of experience. There is a serious change, somewhere serious change in the past 25 years, 20 years. We have lost a very good character, species named as accountant. Excellent people, dedicated. I have seen accountants who had been there an accountant who was there in the marriage of his daughter. There was a serious income tax fight going on, and the moment the muhurt was over, that man with this kind of all this, what to say, when we say this color and all, directly came to the income tax office here. Straight away he came. I was surprised actually. Sir, today you are on leave, what are you doing here? No, marriage is over, sir. My MD is not having that much knowledge to present, sir. I will be there will be unnecessary mess. I know very well. Whatever I can help, I can. I did not call him at all. He came. So such type of people are there. That is always there. But coming back to this one. So if the brilliant accountants, excellent clients have prepared on their own, poor chartered accountant, you may have some serious work in this. Otherwise, that's not a problem. But if you have prepared, then you will do it. Because if you know, you will do. If you don't know, you will consult and do. That's the biggest specialty of a chartered accountant. You will know, definitely you will do. If you don't know, honestly, you will try to learn and then do. That's all your style. So there will not be any problem. Here, that is not the case. He will first do, then later he will do, learn. So that's their style actually. So coming back to this one, these are all the supplies, B2B, B2C. These are all coming there one after one. What you are able to see in these cases and all, you are able to see the cases where the turnover is presented to reach the number taxable turnover. It is coming one after one under the given category. You know very well, it's not merely about the conventional sales. You have advances also, which is getting taxed in case of services. That is coming there. You make some advance adjustments also. That is also modified there. So after adjusting, only these things can come. This is the summary actually. This is how it goes. As the screen was a little blurred, I thought that I can just present this way. What I have shown in that screen is reading this only actually. So B2B turnover, B2C turnover, and you will have the SEZ turnover where you make payment and then do it. Because I am listing out tax payable, tax paid cases actually. Later I am going to come and cover what are all those items which are not having tax liability as such. And SEZ supply in relative to that one, and deemed export in case of that one where you are having liability to pay advances for which you paid the tax actually. Perhaps might not have warranted any sales recognition. And inward supplies on which tax is to be paid on reverse charge. You need to pay, anyhow you need to pay. For the purpose of just numbers, a turnover, though it is a reverse charge turnover, is causing you liability. You fix the turnover, it is getting auto-generated, your liability is also coming here. And taxable e-commerce supply, but in case of e-commerce who is preparing his own GSTR 9, he will prepare, not for you actually. And you have to add whatever the debit notes you have issued. Naturally, you have to reduce the credit note. But I mean e-debit note or GST debit note. And when I say credit note, I mean the credit note for the purpose of section 31(3)(f). That's what I'm meaning actually. What is this one? Credit note is credit note, no? Credit note of financial credit note nature can never be GST credit note. Debit note of financial nature, that is financial debit note, can never be a case of GST credit debit note. So can you please just quickly explain and then, really. Short point is, a GST credit note, as it is prescribed by the law, if it is issued, then it is working as a credit note. Just because you are not able to collect some money from somebody, literally in our terms, you are writing off. Just you are writing off, just you are closing the accounts, just you are adjusting the accounts. For that, if you are issuing a credit note, no way that is going to be treated as a GST credit note. If you want to have some sound knowledge about this one, better quickly have a look on section 15 of this Act. Do they have wealth of knowledge in that actually? Then you will be able to easily appreciate the fact. Section 15 read together with section 31(3). You will be able to appreciate the simple fact that once a transaction happens, there is an official value in the invoice. That is what will generally be making GST liability to you. That's all. An invoice is an invoice is an invoice. That's all. That will create a liability. Please believe that will create a liability. That's all. If subject to the conditions, sincerely, if you are preparing the credit note, what is the condition you can tell? The condition is very simple. Difficult in practice only. If you are issuing an invoice, if there is a rate difference, you can go for a credit note. Because your contract is proving that or your documents are proving that there is a rate difference. Or if there is a quantum variation, you agreed to supply 1,500 pieces. Actually, you could supply only 1,480 pieces. Who will pay for the 20 pieces? So, supply did not happen at all. Or you tried to do certain work. Partly you completed, balance you could not complete. So, incomplete service. Partly. Then that will be meaning that somebody came to you and said that you have to file his tax audit report and also his income tax return. You file a tax audit report. For the reason known to him, suddenly he stopped. No sir, I will file my income tax return. I don't know why. Okay sir, you go and file. No sir, I do have my manager finance, he will be doing it, my director finance will do it. Okay, get out. Originally you had planned for tax audit report and IT return filing. Later now you are planning only for tax audit to be, but you have given the invoice already. Not even one face is believing. Tax audit report given, IT return not filed, already you gave the bill I told. Not even one of my brother or sister is believing. Hey, he is talking about someone else, not about me. When did we give our bill before the completion of work or even after the completion of work also when did we give? Unfair. Sir, with due respect, there is another separate slide, it's lost but we are discussing in detail. Such a type of honest service what our profession is rendering deserves much bigger respect, bigger remuneration. It's not about the money. It's not about the money at all. In terms of money, the world is accepting and understanding the value of the service. Dedicated service by a CA cannot be compared with anyone. I have very big respect to all other professionals. All streams are there. All are doing their good job, no doubt about it. An advocate or a CA, CS or CW, I have big respect, no doubt about it. But I can very honestly tell, even if I had not been a chartered accountant, I can honestly make this statement. That such a type of dedication is very rare. There used to be appointments given by me for our professional brothers. Far away from long places they will be. Often I would have shared also. They will be coming. We are giving a time and chartered accountants presence. If we tell the time exactly, they will come in time. They will not waste the time. Well in advance, they will be sharing the information and details. They will come in time as we are advising. They come and sit, and when they meet me, they will come, sir, I have a case, sir. In my case, what the problem is the tone. I am not good in mimicking, but this is the tone. I have a case, sir. Long time. This is disturbing really indeed. So day and night I am spoiling my time in this. This officer is not accepting at all or understanding. Suddenly one fine evening, he gave some chance also, one hearing he held and he told he will give the time. Suddenly he has passed the order against me, sir. This is unfair. I have so much long attempt I have done and a very detailed presentation I have given. Nothing has gone through. Complete miscarriage of justice. Complete destruction of natural justice. Can you please help me, sir? This is what. All this time what he had been telling, my case, my problem, I am spending my time, he has not seen my work, are all relating to his client. Such time. An advocate, learned advocate, whoever it is, you can just see the court. You will always say that, Your Honor, the petitioner, is how they start. They write the petition also, the petitioner, that's how they, we doesn't come out of his mouth at all. Because he honestly believes that he is an entity nowhere relating to petitioner. Petitioner is a petitioner. I am representing. That is my work. I am a good advocate, they come to me, that's all. They honestly believe. But this poor chartered accountant community is always believing that the case is theirs. In this kind of seminars and all, always I can see. Somebody will be looking a little dull and not so closely associated, but he will be honestly sitting there. A particular slide or particular case law will come. Suddenly he will just jump and sit. You can see. I know very well. That man has come for that point only to this seminar. He is waiting. Some client is there who is suffering from that problem. He wants solution for that problem. He is waiting. 2 hours, 20 minutes, 2 hours, 30 minutes he is waiting. That maybe in the 1 hour, 57th minute when I am just making a pass or note, suddenly he is just showing, that's what. Or if he is not getting the point, sir, can you please explain me? That is the kind of 24/7 support system in the mind of chartered accountant. Very proud, sir. I am very much happy that I am also a chartered accountant in this birth. I am also living that life with you people. Such a type of dedication is extraordinary. Take care of your health, that's very important. Please don't too much worry about your clients because they are not worried about you. So please take care of your health. Otherwise, very happy, sir. Coming back to this one. The declarations what we are making or all the numbers what we are declaring is coming there. Sometimes we make amendments also, right? So advances we are declaring, then sometimes we are making amendment to raise the liability or reduce the liability depending upon the need in the GSTR one. That is also auto-populated tab. And there also we are not having serious work. If we are having anything to correct, we can just correct. But remember, corrections are warranting responses. Now, then the credit notes, as I already told you, right credit notes, proper credit notes are punched by you already. They are coming there through GSTR 1 presentations here. And it is getting plus and minus here, and it is coming through that. Now what you are getting is the taxable outward supply value. You are getting a number, full number, because these are all the numbers from which you are having the liability for tax. Because whatever I have listed are all, every single line item was involving a tax. Maybe IGST, CGST plus SGST, maybe CIS, something is there. So whatever I have listed, these are all the turnover where you are having some liability, tax liability, right? So that kind of number you are getting, that kind of tax total also you are getting now. Unless you are correcting, everything is as such is going to come back. Now, you can have a quick look on these 4 bands. The next paragraph. Having reached that number, you do have some number for which turnover is there, but you will not have liability. Turnover is there, but you will not have liability. These are all the numbers, exempted, nil rated, non-GST. These are the items for which there will be some kind of presentation by you, and it will be coming there. Maybe in the exempted column what you are presenting, it will be coming there directly. That's what is there in 3.1D, para 3.1D of your GSTR 3B also, which is again populated from GSTR 1 only. That is what going to be here also. What are all the items are there? Say for example the 0 rated items. Sorry. So we saw just a few seconds back, zero rated supply, that we saw with payment of tax. Here also we see zero rated supply, but here what we see is zero rated without WOP, without payment of tax. And supplies for which you are liable to pay in the case of a tax liability where you are adjusting and doing that. Or what you are getting that one in the, because this is other way around actually. Your turnover, somebody pays tax. You will not pay tax. This is somebody like, we believe that this column will be filled by somebody or will be already filled for somebody who is a GTA, maybe a security agency having a corporate customer. Those people will be having turnover declared, but they are not going to pay tax for that. And now what you are getting as a total is the total of the turnover for which you are not liable to pay tax. Turnover. It is turnover. Nil rated turnover is there. But of course, we are having some book sales, 4910 chapter, you will not pay the tax for that one. Or you are having some kind of electricity sales out of excess manufactured electricity by your windmill. That is a nil rated turnover for that purpose. You are having water sold by you, excess water from your well, 2200 chapter. Water sold unbranded, pure water, uncanned water. There is nil rated. So many things are there as nil rated, right? So those things will be there, or exempted items can be there. So these are all the items which will be coming there, and what we already saw is the value of taxable turnover. What we are just now seeing is the value of turnover which are not attracting tax. Then together we are getting the taxable turnover and non-taxable turnover in all actually, which is reaching that number actually. The same type of adjustment as to the debit notes and credit notes. I have debit note, less credit notes coming to these numbers as far as this exempted turnover. So these are all the things what we discussed. The letters are very small, that's why I showed in this screen already. Now you get a number. This is the number, what is the gross number? You can say that aggregate annual turnover provided you have a business only in this state. This may be part of your aggregate annual turnover if you are having multiple states. If you are a single state case, your turnover here itself will be appearing, it should exactly match to your financial statements. This is where the story starts. Hitherto what we are seeing is only a preface. Now only we are starting our serious discussion actually. The figure what you are getting here, if it is satisfactory, if it is well matching with your financial statements, audited financial statements, good. You have got no serious work related to turnover at all. No sir, I have a problem. What problem? My exempted turnover is mistake. So please go there and correct it, then you will get a different number. No sir, I missed the taxable turnover itself. Then you have to go there and the relevant column you have to correct it. If you are correcting it, it will be warranty and liability to pay. Within few minutes we are going to see some other screens. You will be understanding that what you have paid will exactly come. It will be rigid number, paid. What you are liable to pay, here it is there. The payable and the already paid, if it is matching, safe. If there is any gap, naturally that will be coming as an additional liability in para number 14 that we will be discussing with short. Now, having seen this, turnover on which tax payable is known, turnover on which tax is not paid, that is tax is not paid, is also known. Then this is the one what we need to know, and annual gross turnover is C. As I told you, there the turnover related matter stops. If you need to correct, you need to correct. Then always a question is, so practically we want to understand certain things. There is a school of thought which says that don't touch the GSTR 9. What for you are having GSTR 9C? GSTR 9C is a reconciliation statement. Make it present. 9, let that be 9 itself. Present it with subject to some minor corrections in the ITC. We are going to discuss because automatically it will not show the right picture actually. I will show you what is that. But anyway, subject to that, why should not we file GSTR 9 as such? My sincere advice would be, out of my experience, you can leave so, nothing wrong with that. Two things you need to ensure. One, the client is able to understand why the notice is coming. Because approximately 15 to 20% of the notices are coming there when 9 is filed with the wrong number, 9C is filed with the right number, You are correcting it and filing it. They don't see that. Because it is system generated notice. They will not know anything at all. Because they blindly believe the system. Whatever is the software is throwing to them, they are making it as a notice and sending it. That's all. And because they believe software too much than their own circular and head office also. Just on the lighter side. This is well known story. Already I have told also, I think. It was a helicopter which was flying in a troubled sky. Big turmoil was there, and the helicopter was caught in some hurricane or something like that. Then the pilot is a very experienced man. The co-pilot is a young guy who has gone with him, maybe for the first flight or something like that. And the pilot is trying his level best to send some SOS, no signal is there. This is a hurricane actually. No signal is there, he is not able to identify what is there in the ground because he is not able to land and see anything at all. Visibility is very poor. So whether he is on the ski, just flying on the ocean or on a terrain or maybe on a kind of a valley, he doesn't know. So let me try, just trying it, and some kind of signals and SOS is sending. He is just asking a simple question. Where are we? Some human being there, they will be able to respond that you are here in Texas, you are there in Sydney, something they will tell, right? So you tried. He got a reply. You are inside your helicopter. Immediately the pilot told them, very good. We are just there somewhere in Silicon Valley, big companies will be there, terrace will be very bigger, we will land there, just get down. Co-pilot was astonished. We are always there. When we are article student, our senior is the hero for us. We don't know how this man is solving the problem at all. Just like the hero, all the 3-4 guys will be breaking their head. Hero will enter, see that this way, that way, that way, this way, finished up. That's all. He's a hero for us. That the same way, the pilot was much respected by the co-pilot. Said, just wait, get down. Don't worry, you just come here. Yeah, kid, don't worry, come. So they landed. Fortunately, as he believed, a very large terrace was there for them to get down, and no helipad was required. They somehow managed to get down. Co-pilot was astonished. Asked the pilot, Mr. Pilot, I know you have flown for about 10,000, 20,000 nautical miles and all fine, but whatever it is, such a precision you are having by this. You told that immediately on seeing a message, you told that there is some software company will get down. How it is possible, sir? Please teach me. Hey kid, that's not a big problem at all. It is only the software engineers who can give technically correct answer, practically useless answers. Due respect to software engineers, nice people are there. Very good people are there. Oh, that was his observation. So that's how here, technically they are giving right information, the software or anything what they are believing. But practically and legally, whether it is valid, left and right notices are issued without seeing that. What for they are giving, why they are giving, they don't know. When you go and ask them, sir, that's a problem actually. So anyway, coming back to this one, they are generating the notices. Here also, what we are seeing here is the turnover, what is reported, is what you are getting as a turnover. There is no big serious difference in that point. If you have to change it, there is a need for changing it. You can always ask question, sir, don't we have real problem in practice that we filed something, but the summary came up, it was there. During 17, 18, 18, in fact, part of the 1920, we suffered a lot, of course. We filed some returns and that showed something else. We filed some other ITC claim that showed something else. Much often we could not believe that whether it is our number or some other company's number. So that is how it was. Then later got settled, now it is, technically it is right. What you file, that comes. That is very clear. There is no serious problem in that. Coming to this one, the turnover reconciliation part is over. Now we are having the part relating to the ITC reconciliation. Input tax credit, what you have taken. So there is going to be a comparison of what is auto-populated by the system, one. What is the tax ITC reported by you and used by you, that is going to come here. What you did, that is what is going to come there. What your suppliers have done is what going to be seen here. And it is going to be compared. Normally speaking, you would have taken a lot of care in 23-24. You would not have taken wrong credit. Naturally, what credit was there is the one what you have credited. If you claim that, it is perfectly going to be okay. But unfortunately, if you have missed to see some of the credit notes, lateral changes in that number, some amendments by your suppliers, perhaps it can be. So if that is the case, then you need to have some kind of serious correction order. Now we can see quickly these things. This is what here, but you can see here, this is better, I think. When you are seeing this, it will be easy to read. So ITC on inputs, input services, capital goods, imports, forget about the transit, it's a very old one. So etc. all taken credit. What you have taken, you claim, I am eligible for taking this. That's what you have said. That is all going to just reproduced here by the system. So automatically it's going to come here. Any other ITC not specified above, to be presented under para 6M. Please share with me your views. Sir, everything you have listed. ITC on input, ITC on input services, ITC on capital goods, ITC on import, everything you have listed. Even TRAN 1 also sometime back it was there, that also you are listing, now it is not there, fine, leave it. What else can be the credit which you would like to present in 6M? Whatever you have taken is coming. Whatever you have taken is coming under these categories. What else in 6M you are advising us to see that it is also there, don't worry. What is that? It is also, which is also there? Have any other? Sorry?
Previous year.
Previous year, yeah, point actually. Yes, of course. Then, any other thing? Because once you are taking, it's taking. Previous year, next, current year and all, we know. System doesn't know. What you are taking is popularity. You are placing it in proper place and seeing that at least you are fixing it. See, much often what happens is, in case of litigations, you are permitted by the court or the appellate authority to take back the credit. You take the credit. But where from it comes? You take. That's it. You are taking. You are permitted, you are taking. Where to present it? You cannot present anywhere, right? You will not see in 2B. You will not see in import list. You will not be seeing in capital goods, this, that, and anything, anywhere. So naturally, that kind of cases are coming to you. You can see that you are placing that in 6M because what is not normally there, something is abnormal, that is coming. What is not general will be coming under the place. 6M.
In this case,
Sir.
Input credit is not found in Form 2D.
Okay.
But the invoice is there.
Okay.
What is the position of the auditor?
Yes, sir. See, as long as we are concerned, the honest reply to you in one line is, definitely we are not liable for 9C filed by them, sir. Morally we are liable. That is okay. Legally we are not doing anything at all for them because they are filing, they are signing. We are not doing anything at all. But we have an understanding. Morally we are liable, professionally we are liable is the first reply. Second part of that one. If it is not in 2B, sir, certainly it is not advisable to take the credit, sir. Certainly. Yeah, especially in 23-24. Then what should I do? My customer's supplier is erring. We have to go after this erring supplier, try to see that his money is deducted by us, we are collecting from him. He's highly advisable, sir. Because up to 2021, a long fight got settled. DY Beetle Enterprises case was there. You do have Goparaj, Krishnan versus Union of India case out there. The core of case laws where we were able to establish that an error or a kind of fraudulent act of a supplier cannot affect the ITC of the, especially the benevolent provision given to him, the recipient of the service, cannot be affected. It has been accepted by court time and again. But after settling these 2B provisions and all well, and able to give some kind of serious inputs on a monthly basis well in time, the real time data is available to a recipient who is trying to take credit. If it is not there in 2B, he is not supposed to take. If he takes, he is taking the credit and he is taking the risk also. That is a problem. Fine, sir, okay, let it be. He wants to fight. He has got his invoice, he has got his bank payment detail, he has got his ledgers, he has got his e-way bill, he has got his invoice, all of that. For some reason, the supplier is not cooperating with us, he is not correcting his returns. A long time was there for him to get convinced to correct this. We told him, he did not correct. Then what should I do? We are taking a risk, we are taking a chance when we try to take credit. And naturally, maybe in this kind of 6M or somewhere, you have to present it. But knowing very well and sensitizing very well the client that this is going to be a debatable point. There is going to be a serious query. Be ready for this one. We have to fight. It's not going to settle down on its own. That's what we have to tell, actually. Now, this is all I just explained to you. This is what we had been discussing, trying 1, trying 2, these are all not relevant. So this is the one what we have shown in this one. Now, having said that one, what you took, I already told you. What you dropped, what you forsake, need to be there, right? This is what it is. In this is what you are able to see. Under section 37, what you are just reverse it. Somebody has not filed this. The opposite party's return is not supporting you. What you are trying and reversing it will be coming here. These are all I am saying for those who take the gross credit on the top in para number 4 of 3 GSTR 3B, and then in para number 4.1 they are trying to reverse. For those parties I am saying. No sir, I am not doing that way. I am just directly working out, seeing that the net figure is taken up by me and doing it. Yes. You cannot be stopped from that one. The biggest problem you would have already suffered all these days in the past 4 months or 5 months seriously, especially in Tamil Nadu. Left and right you will be getting phone calls. Even for our regional council election and CCE also, there will not be that much calls from that one. From your assessment circle, left and right phone calls. Sir, please reverse this amount, please reverse this amount, please do some help to the government. In your nation building, be responsible. Nation building. So you get several phone calls. You don't know why he is calling at all. As if you have borrowed some credit card from him and you have filed to return that card to him. Every day, morning and afternoon and evening also he is calling. And asking that, sir, I am calling from assessment service. Sir, I am calling from assessment. Let it. What to do? Sir, you are not taking credit. Please take it. Sir, I am credited. Take it and reverse it. Oh, take it and reverse it. Back to us. No, don't forget. Don't go to the others column 412. Better you go to that and 41 and reverse it. No, sir. Why should I say this is not relevant for me? This is related to some insurance of a vehicle or something relating to staff welfare, food expenses spent by me. Something is not eligible for me actually. What is not required for me, I have not taken. It's a garbage for me. No. When we are having a system, you have to follow that. Take the garbage, come here, throw on your dining table, clean it, throw to the dustbin. We don't understand why he is asking actually. But what the officer, learned officer is saying, sir, you don't know my pain, sir. In our reconciliation, if that figure is not there, we are not able to claim for state on behalf of our state. Please take the credit, please reverse the credit. So this is a problem what they are saying. So they are convincing you time and again, and there is one IMS already come there, invoice monitoring system, right? So when that is going to be there in place, it is going to lock your numbers, all pre-designed. So whatever has been given as information by your supplier will automatically come there. You have to say yes, no, reject. Something you have to say, right? Yes, pending, no. Pending is also going to be closed actually, and then after that is going to be yes or no. So you have to say yes or no for that. Somebody is telling that he has done some transaction with you. For every single transaction, you have to say yes or no. This is what going to be the order from 1/1/2025. It is already there. Now it is in recommendatory status. From 1/1/2025, it is going to be mandatory one. So you have to say, this supplier is saying something, yes, I accept. This invoice, I don't accept. Something you have to tell. So if I am not saying anything at all, will be deemed that you have already told yes. That's all.
The goods was not received.
Sir?
The goods was not received in one-time transaction.
Yeah, that kind of problem is there. What they are trying to say is, after all 13, sir, in several cases, 25 days, 35 days and all, goods are traveling. When only after receiving the goods, whether the goods what I intended is coming to me or not, I will understand. Is this the goods what I intended and what I received is matching? Only on seeing the goods and inspecting I can know. But it is forcing us to say that no, say yes or no. Say yes or no, I can say sir, but only after, no, say yes or no. So these are the representations already made there, and they are giving a column now that pending decision. They are allowing you to click that actually. Because you have to commit at least next month. It is now pending. Next month you have to say yes or no. They will not leave. So that is how that is coming there. Yeah, we'll see that. Coming back to this one, there is a reversal for 39 reasons. Somebody filed, they did not file 3B, that this, so many reasons are there. But because of that you would have reversed, this number is cancelled, so much cancellation, something is there. So you have to reverse the number relating to the ITC relating to that person. Maybe a proportional reversal will be involved there in case of mixed supply. You have a taxable turnover, you have an exempted turnover, you take common ITC. There is a formula already given there. If the formula is not workable for the current year, take the basis of numerator and denominator from the previous year turnover, work it out. So this is too complicated, sir. You are saying very lengthy, very fast things, sir. Old is section 80 HHC. Copy paste. That's all. There is nothing. Rule 42 is nothing. Rule 42 is the grandchild of the erstwhile section 80 HSC of income tax. Nothing more than that. What was there actually? Export turnover divided by total turnover into the value. That was there. This is the same thing here also. The only thing is there the income was there. Here you have to replace the word ITC. That's all. Common ITC multiplied by the exempted turnover or non-taxable turnover divided by this one is the value of ITC which you need to forsake. To the extent to which the taxable turnover is forming a better ratio is the extent to which you are going to gain the common ITC. Exclusive ITC nobody bothers. Exclusive ITC you take credit, you use it, that's all. The ITC, what is coming only in respect of taxable outward. Take credit. No problem at all. An ITC which is relating to purely non-taxable income ab initio, don't take at all. Ab initio, don't take. You know very well. This input is meant only for exempted. You know very well. Don't do it. It's not eligible at all. Section 16 is preventing. Only a case where it is common, maybe for this and maybe for that. Sir, I don't understand. What is this maybe for this, maybe for that? You are a chartered accountant, sir. You are rendering service. You do a detailed tax audit or company's audit, statutory audit. You raise a bill. Oh, I say somebody, 10 lakh rupees, one bill raising. Again, nobody is believing. This is the biggest problem, sir. Nobody is believing. Right, okay. Fine.
Sir,
So, sir.
In the AD areas, some items are auto-populated. So ineligible credits are also automatically coming.
Yeah, that I will address. There is one point actually. Other reversal I am going to tell actually. In red color it is there. Now, you raise an invoice in a company. Your invoice goes there. They take credit of that also. That company is having a sales mix of 10 crore rupees of non-taxable exempted turnover, 90 crore rupees of taxable turnover. That's how the mix is. You are a chartered accountant, when you are verifying the records, vouchers, records, giving your opinion, balance sheet related audit report and all, only for taxable you don't do, or only for exempted you don't do. You do for everything. You are an auditor for everything. When you do the service and give the invoice for 1 lakh rupees, 10 lakh rupees, your 1,80,000 rupees of GST will be falling under the common ITC category. Because your service is used for this. So is the case of an air conditioner. Air conditioner doesn't know whether it is running for a exempted transaction work done by an accountant in the AC room or a taxable turnover. It is keeping on running. That's all. So is the case of security, so is the case of company secretary, so is the case of lawyer service, also reverse charge only. This is how it is. So these are all common. Under Rule 42 to be warranting a reverse. Rule 43 is relating to capital goods used for taxable and other goods when it is moving out. And other things you can do. So all fine. I think I would have already reversed it. Now you want me to place it and understand it. If I missed to do it, I can do it now. 20% related matter you told, I remember. All fine now. Now, grossly irrelevant credit is coming and auto-populated. Grossly, I don't know what is that at all. I don't know why it is coming. Or I know, but I am not at all touching that. What should I do with that one? As I told, not taking that credit at all is advisable. But our learned officer of the assessment circle doesn't leave. Even if it is garbage, bring inside and send it out. That's how it is. Okay, we bring in and in that case and all, you can just use these reversals which are not grossly relating to you at all. And put the reversal saying that these are all other reversals, I have no relationship with them. For the sake of taking, I have taken, and for the sake of reversal, I have to reverse, I have reversed. And whether I reversed in Rule 42, because the problem now what you are facing is, they are forcing you to reverse under Rule 42 everything wrongly. Wrongly. See, you would have, I think already you would have come across this problem actually. Whenever you are reversing, that amount is going to reclaimable ITC register. See, there is some case, my learned brother asked me, sir, I saw a number. I was a very honest assessee during the year, I just thought that I should not do this. I reversed it. When I reversed it, I am using the para number 4.2 and go there and say that others. I reversed it. My learned officer gives a call back to me and saying that no. Why are you placing under others, sir? If you are placing under others, it is going to reclaimable ITC. And we are waiting that when it will be reclaimed by you. Sir, once you don't want, you please throw it out, sir. Sir, I have already thrown out, sir. Okay, but why are you doing in others? Then where else I can do? Rule 42, 43. Sir, Rule 42, 43 not related to this. Let it be. Please place it there. This is the problem what we are facing. So you have to just split the Rule 42, 43 line item into two parts, that which is really Rule 42, 43, though, next category, though is there in Rule 42, 43, what is not really 42, 43. Varum, ana vara. This is how it is. So this is unnecessary work actually, really unnecessary work. You know, we have made some representation, they are just considering. Let us see, but now, coming to this one, these are all the areas where you will be having others to be presented where it is irrelevant, you can just present it, say that, I don't want this, it is 37, 39, 42, 43, nowhere it is there. Some crap it is, I don't want. So you can place it. Now, here, we are settled with 2B. 2B is generating us the required ITC. which is tabulated. What is relevant to us, we take. What is irrelevant to us, we reverse. When we reverse it, Rule 42, Rule 43, 37, 39, all we consider. In case of other things, others, we place it, do it. Now, having done all these things and all, you are having some ITC in the register. You have taken it is available. But what is auto-populating is more than what you have taken. Say for example, as I told you, some insurance related to car is there, some staff welfare related food expenses are there, maybe some personal consumptions are there. So many things are there. You are seeing that you are not eligible for it, you did not take it. So those things, though available, I don't want to take credit, is the category where you have to punch. If you fail to punch, in the lapsing column, what I am going to show you in the next column, it will automatically come there. Sir, should I say clearly, I don't want this credit, or should I just keep silence? Effect is same. What you have claimed during the normal given time, namely 30th November 2024, is the one eligible for you as far as 23-24 is concerned. It's over. Day before yesterday, it's over. Whatever credit you wanted to take, you could have taken. That's all. Now you cannot do anything for 23-24. Right, okay. Now having said that it is not eligible, now I want to have a clarity. Should I ensure that I am clearly mentioning in this return that the ITC available in the 2B, but I did not avail? Should I punch it? Or you only told that by default, if you are not touching this at all, during the year not claimed and lapsed, it will be showing you what is right for me. Effectively, you will not get that credit is very clear. If you mention it, more professional presentation is there. That's all. If you mention it, if you don't mention, if you don't mention also, you are not going to get sir. That's all. Only thing is, it's not so perfectly professional because you have the worksheets and things and all. Practically speaking, you can very well say that I know some supplier has presented this in my name. It is there, but I don't want it. I am not going to claim. I don't want to avail that. Consciously, I have taken a decision, I don't want to. That's why I am leaving this. We mentioned that your worksheet is matching well. This we need to do with complete reconciliation in our hand and then proceed. Sir, practically let us ask a question, sir. We are doing very well, so many advices to the clients in advance, reminders are sent, asking them to come prepared within time. So many things we do. Invariably, a typical Indian mindset is, sir, what is the due date? Why you are asking the due date? You come with the data. No, sir, what is the due date? 31st December. 31st December 2025, sir? 31st December 2024, sir. 31st December 2024. Okay, we'll come. Invariably, by 30th December 2024, you will get a phone call. Sir, are you in office? Can I come? This is the standard style of Indian customer. So, no exception, our client is also. So, you try your level best. Sir, in those cases and all, how can I do these things and all? One. And that guy is crying that, sir, somehow try to see that penalty is not limited, sir. 25,000 and all, too much, sir. You came on the last day. The government is giving 9 months time from the end of the year. I did my audit and completed and gave you the tax audit report and income tax return somewhere by 31st August or 31st July itself. Sir, it's okay, sir. You gave your bill also. Whether I honored, it's okay, sir. No. That is totally different disrespect. That is okay. But what about the time what you had in your hand? August was there, September was there, November was there, December was there. You did not come at all. All were there, sir. Where is the time for me, sir? You kindly just somehow avoid, sir. See, this I am not, the idea what I am going to tell you is told to you, shared with you on good faith basis. We need not extend this courtesy to any of the client who are not deserving that kind of courtesy at all. With this preface I start. Right? A disclaimer. Sir, one simple idea. If you want to avoid the penalty of late filing for a genuine case, good case, take a mild risk of filing GSTR 9 with simplest study of turnover reconciliation, ITC placing properly filed. This I am sharing with you. You are our professional brothers. You want to safeguard the client, perhaps maybe a small client having some small turnover, some 2-3 crore rupees, not a big profit earning high, or some who have done some mess, some bereavement in the family, did not come in time, accident, this, that, accountant ran away, whatever it is. In the last hour, if somebody is coming there, how to save? File the GSTR risk. Please make them to write a management representation letter specifically requesting us that as I come in the last hours, please help me. You can file it, any reconciliation we can take it up in 9C. Definitely there is a possibility of notice coming to them when there is a difference, but you can easily explain referring. I will show you those concepts in the next session actually, subsession. You join and close it. Sir, it's all fine, sir. You only filed GSTR 9 in your given example, 30th December he came. We took a pain of some 2.5–3 hours time to verify quickly certain things of basic turnover matching, basic tax matching, basic ITC presentation on modifying. And you very clearly told that you are not gone in depth, complete verification on a time, you are filing only GSTR 9. So law is saying simply, I'm not saying, law is saying simply, if a person has failed to file his GSTR annual return prescribed by 44, read together with section 80, subsection 3, he shall be liable to pay a penalty of 25,000. In your case, technically, 31st December 2024 is the last date you filed the GSTR 9. Right GSTR 9, wrong GSTR 9. Short paid GSTR 9, well paid, these are all not questions. You filed your GSTR 9. Right or not? Right. That's all. You have a case to fight that, you cannot leave penalty. No, your 9C was belatedly filed. That is only an appendix. Main has come. 9.5. We have one. This is workable. GSTR 9 should be filed. Right. No, there is some short payment. With interest I have paid. See the 9C. Reasons, para by para. In a case, there was a situation of 13 reasons appended for one paragraph. Para number 6. They have to give reasons for variations. 13 reasons we told. Where are there? So many. So honestly, he has paid the tax with interest. What more do you want? You cannot issue notice. They drop. So what I am saying is, this is only for genuine, exceptional, honest cases, rarely coming to you where delay was unavoidable for. Now coming back to this one. Now the ITC which is not available, you place it. YTC not eligible, you are placing it. You are punching these details and all and getting that figures matched. Then naturally, what the credit you have taken will be eligible credit matching to the taken credit. So what is available is compared with what availed by. In this process, what is ineligible, removed. What is available, not taken, removed. What is immovable, import related property which is not presented and you are presenting it, coming. All having adjusted, you will be able to see that perfectly this coming to this. It should match. No, sir, all fine. But in my case, having done all this incident, I realized that there is a excess credit. There is an excess ITC claim to me. That's what. You know, you are very clearly saying there is an excess credit claim by you. It will be shown in this paragraph itself. Such an excess ITC is warranting a payment outward by you. You need to pay. If at all some shortage is there, if you are sincerely and religiously following these columns, naturally you will be ending up with a shortage. That shortage will be making you to pay that liability along with this one in para 14 when we are discussing I just told you. Now, it's an interesting point actually. Tax percentage wise or category wise presenting the term. Now, broadly speaking, it will be looking nice actually. How much time it will be taking is a serious problem. Whenever you are taking assignments, please decide the kind of lectures of this kind will be helping you for one simple reason. What is the time involved in that one? What is the skill set required for your team? You can easily decide on this basis of these discussions. It will help you to see that peacefully you are planning your work. That is the very purpose actually. Because it is not that you, unless I show in the screen these columns, you will never come to know about these columns and details at all. It's not the case. You can easily, anywhere, everything is open, everywhere you can read it. You are a learned CA, you can easily update yourself. The purpose is to see that what kind of work it is making us, what kind of thought process is involved, how do you want to plan, what kind of skill set and what kind of team you need to have, that you can easily decide. Right? Coming back to this one. We are having the presentation in para number 9. That what is the rate-wise total for this one? This is how it will be coming. By and large it is right. There may be some minor error, you can just check it up. Various reasons. One reason is not that various reasons are there. You will be having your worksheet perfectly. See, there are clients who are having small turnover making you to work big. It's very dangerous. Because the kind of work what they are making you to do will be something like Tata's or Reliance work actually. But his turnover will be after 10 crores or 11 crores, that's all. But he will make you to work like anything. So better plan that. whether they have their data like this properly in their software, whatever they are using, maybe ERP, maybe some other software, accounting software, can they pull this data out? Whether their worksheet monthly can be consolidated meaningfully to reach these numbers. This is showing each percentage wise what is the item which is coming under that, and you are totaling it and then cross-checking it, whether it is coming there to this figure or not. Because you are making the payment in two categories. One, it is coming under the payable paid by cash. Two, it is coming through ITC. That's all totally you are doing, right? It's all past. During the year 2023-24, there was a liability as per your worksheet to a sum of, let me say, 75 lakhs was the liability. The 75 lakh rupees liability may be under IGST, CGST, NGST, says whatever you want to say, all together 75 lakhs. The 75 lakh rupees are tax, either you should have paid by cash, say 25 lakhs, or by ITC, say 50 lakhs. This total should match to this one. So if that should match to this one, and if you want to confirm what is coming to your screen after your 2 rounds of work relating to turnover and ITC, naturally you should be having perfect worksheet in your hand. First to check whether the 12-month worksheet what is given to you can be transformed into an annual worksheet properly, whereby you can understand this cross-check is going to happen perfectly. If it is happening, your work is logical, meaningful. If not, you are going to do the accountant works, then only you are going to do the chartered accountant work. So plan it that way, you can be able to do that. Then, this short point alone we'll see first and then go. Regarding this ITC related matter, here there are some few points what we need to note. ITC is taken there from the relevant year is always a normal story. Fine, okay. In this current year it is appearing, in the current year we are taking. Not that in all cases it is happening. There is a need for specifically classifying the ITC, what you are enjoying during the year or what you are dropping in the year. The first part, if you see in this column, actually if you see in the part 5, supply of tax declared through amendments, there will be some kind of debit notes also when it is coming there, and that will also come there. Supplies of tax reduced through amendments, net credit note is also there, because this is also causing some kind of impact on that actually. Then ITC reversal during the financial year or ITC availed for the financial year. During the financial year, for the financial year. This is the category. Now you take 2B for the current year, what is reflecting also coming there. Sometimes the previous year period you are taking it. The same, you remember this paragraph, the same thing will be having an impact in 9C also. I will be just showing that particular paragraph also, how it is coming there from here to there. Para number 7 also coming there, para this also, for part 5 also coming there. So this will be presented only with a good worksheet, you can work on this. So you can just skip and go, that is different one, but you will not be able to match properly. When there is a good worksheet, you can easily understand that what's happening there. Now this is one set actually. As I told you, these 3 items, what I showed you now is there in the screen actually. You can present this. Then, here the differential tax, para 14. I told you that if you are having liability to pay, you are honestly accepting when you are doing a taxable turnover reconciliation also, if there is a shortage, it is going to be explicitly shown as payable. The payable figure will be more when you did the taxable turnover presentation. The paid figure, I showed you with the 2 arrow marks. Cash paid, ITC paid, I showed you. That will be less. What you committed in the previous paragraph will be more, payable more, paid less, then differential figure will be payable. That is what is additional liability, what you are going to commit. Similarly, in ITC cancellation also, broadly ITC taken by you. I am using the word taken for easy understanding, you can use the word avail. ITC taken by you, used by you is totally different. ITC taken by you. Then you are just reducing that, what is not there, what is not available, what is ineligible, what is not presented, what is, all one after one, what I showed you. Then end of the day, you are going to reach a figure which should match to your really ITC enjoyed by you. If it is matching, fine, okay. If it is more than what you are taking, it's also fine, okay, balance amount is going to lapse. But if it is short, you enjoyed more, but you are eligible for less, that shortage will also come there. That will be creating your liability. So, the turnover relating to taxable aspects will cause short payment when you are preparing. You can easily understand this is what is causing. The ITC, what is short paid, is going to cause you liability. That is also you can easily understand that this is going to cause you liability. That liability is the one what you are going to commit in the GSTR. And again, I am just reiterating, Only after paying this so-called additional liability should I file this GSTR 9. Sir, technically no. You can plan well to see that GSTR 9 is presented as such without any major troubles, but 9C can come into picture and try to see that DRC 03 references in each reasoning is given there, all fine. But two things, sensitizing the client on this point, that for your convenience urgently I am filing 9, but this is not the right way. I should have complete worksheet in my hand, I should have given you what is liable perfectly to your knowledge. Noting that one, you should have paid, I should have considered that and then presented the 9 itself perfectly. In the reconciliation process, I should not have this kind of tax payable, ITC wrong and all, paid it later only, is the right story. But considering your special case in the last hours, I am doing GSTR 9, knowing very well there is some short payment at your risk. It's not my call, it's your call. Just to avoid the small penalty, I am just doing this one, you can file this. But notice may come. I will be able to just write a simple letter with a screenshot of the 9C saying that all explained. You have paid. Interest also paid, tax short payment also paid, non-payment also paid. There is no case for you, please don't issue the notice, drop it. But there is a work. So sensitize him and you can do it. There is one column here. 99% of the assessors are not filling up. 99% of the assessors who are all having the refund process. I don't know why. How much is the refund claimed by you? How much is the refund sanctioned by you? How much is the refund rejected by you? How much is the pending? But one of my client asked one good question. Sir, with due respect, I want to ask some questions to you, sir. You ask, always you are respectfully only asking, ask. First line, sir. Total refund claimed. Do you believe that the jurisdictional officer doesn't know what I claimed? No, it is there online. Good. Next question, sir. Refund sanctioned. Whether it was sanctioned by Afghanistan GST officer, sir? No. Indian officer. Very much online. Indelible records. They are asking me. Right, next day. Total refund rejected. Rejected by Canada or American officer. Right? He only rejected. If anything is rejected by him, he only knows. Why he is asking me? Then next day. Refund pending. Again. This doesn't know. He doesn't know at all where it is pending. It is somewhere in Mars or Pluto it is there. Sir, he is the guy who is keeping in his hands, sir. What I should do in this matter? Then what next? Total demand of, how much you demanded, you yourself don't know. You are asking me that how much I demanded it. And I have to punch. If I am punching wrongly, you will just come and put me on notice that why did you give me a wrong demand related matter? Sir, when you are able to cross verify whether the demand raised on me is correct or not, if I am telling wrongly, you will find it out. Then why are you asking me? This can also be auto-populated. Why should not you make a representation? I made. It is there, of course, we will see. We don't know what will happen. But that is there. What I am saying is, these are all the columns what you are having. My sincere advice will be a good culture of reconciling and keeping it at least on an annual basis will help the concerned client very well. How much is the refund claim? How much is pending? How much is rejected? See, why I am saying is, if it is rejected, whether the ITC rejected came back to his credit by way of a claim, whether he should go for appeal or not, he has to decide. If he is not going for appeal, you should just go and click a small column that no appeal preferred. That's all. The money will come back to his ITC register. If not, it will go. If it is sanctioned, what is sanctioned, whether it is matching to the claimed amount or not, it's a good one. If there are some demands, you are trying to understand that what is the advocacy's notice issued, what is the status of that, you try to understand seriously. It's good for you. Right? So that is a different perspective from which I am telling, but I sincerely respect the questions asked by you. I think you will agree with me. Everything is with you, and if they are indelible, neither I nor you can change anything at all. Then why are you asking me to punch these things at all manually? Not necessary at all. Good question. Now, demand pending and tax paid in the SOTA. Last few items. If you are going to para number 16, you are having the details related to composition tax suppliers, how much they supply. It's only for statistics purpose. If you are having, advisable, please give. If you are having, sir, if I am leaving, what will happen? It's always a Indian style question actually. Whenever you are asking a person in India to comply with something, say for example, sir, this is one way, don't go. Sir, if I go, what will happen? This is the due date, please file your return with it. Sir, if I am not filing, what will happen? So invariably you should know that what will happen if you violate. This is a standard question actually. So here the question is, composition taxpayers would have supplied it to you, what is the value? If you know, please tell. If there is a case of deemed supply under section 143 as per 48 by 2017 notification, then please present it. I supplied to you, I supplied to public sector bank gold, I supplied for EPCG follow this much, I supplied for advance authorization cases. These are all covered there in the deemed thing. So if it is there, that kind of purchase, then it is present. If you are sending the goods on approval or something like that, it is again a tax. You should have. You cannot say I don't know. So these are all the data what you are supposed to file. If you are not filing it, it will be treated to be defective and notice will come and they have to do and you have to pray that an incorrect return I did not file. Please don't slap me with the notice of section 122F and all. I am not liable for that one because 10,000 each they will be able to charge. It's unnecessary. Please present the right data to them. Last two items of this subsection actually. HSN code outward. Sir, you cannot avoid this. Up to 5 crore rupees turnover of that particular year, 4-digit number of HSN. Beyond that one, 6-digit number, unavoidable. You have to present it. See, please remember, your GSTR 1 can be filed without HSN, but technically it is erroneous return. Your GSTR 1 can be filed without HSN data updated in that. Yes, I agree. Can be. Just because it can be filed without HSN data, it doesn't become a good return. It's a bad return. It's a defective one. It needs to be cured. Right? Much often for larger numbers, GSTN automatically generate the notice and sends you a warning letter. Immediately on filing. In 10-15 minutes itself you will be getting a notice that a large return you are filing but you are not filling up the HSN column at all. Why? Take care of it. It will be treated as a serious error by your assessing officer. Proper officer will issue a notice. Make up. Here, coming to this one, we are just after all giving this. Inward supplies detail should be given. Now, please.
Let's say my site has 200 line items. Fill it one by one manually like there is nothing we can upload or anything. Is there any way out that we can do this?
Alright. I'm just repeating the question. Have I got the question correctly? You just see for the benefit of others also. A client is there who is having more than 200 plus line items every month whenever he is filing the returns.
HSN code
yes.
supply.
HSN codes. 200 plus HSN codes I have to punch. Is there any other easy method to see that I can reduce this work involved in this pattern? Unfortunately, what I have to say is all the 200 line items need to be present at one point. But again, very honestly tell you that you can professionally and expediently decide what kind of clustering can be done by you. Extraordinary, minute presentation certainly not warranted. Out of this 200, you can decide expediently that what kind of 45 to 55 line items you can club and present. Nothing seriously wrong. Because when you try to match between the outward and inward, it is not exactly one-to-one actually. At least the broader 4 top line item of the chapter should match at least. See, the inner part of that one, subheading of that one will be varying. 4 digit to 4 digit, if you see 32 is matching. Then 25 it may be something, some medicine. 32 may be medicine. What industry it is, ma'am? Is it pharmacy?
No, sir.
Yeah. Any
provision.
Oh, okay, grocery shops. Very good. That's the case actually. So what you can kindly do, ma'am, the kind of dal, the kind of the vegetable, the kind of rice items, what the kind of this you can club together broadly. You don't so strictly go by that one. End of the day, when you are doing this analysis, broadly it will match. But to the extent what you can cluster may have some logic series. That's all. Okay. Right.
Thank you, sir.
Inwards, see, outward somebody itself is having its own problem, as my learned sister told now. In inward, you have something in depth. And he is asking questions: purchases, carriage inward, carriage outward, staff welfare, conveyance, rent. Mostly all your P&L items are there. For a while you are just staring at it. Is it an income tax return or whether it is something else? No. You are in the GST return only. And then you are convincing yourself that you have to. See, it is not necessary that perfect input breakup of these inward items need to be given. But broadly, you try to see that you are presenting reasonably in places and go for it. Presenting everything under the any other expenses 1, any other expenses 2. Other is, see, one learned friend in a training asked actually, a very senior level official actually, sir, can you see people, please advise your clients to prepare a proper response for what, sir? Sir, there is one column Other liability. Under the other liability, sir, there is one line item, others. For that others, there is one substitute, sir, that is others. The others under the other liability is what? Nobody knows. Sir, please ask them, sir. Let them be specific. Just because some miscellaneous column is given there, everything cannot become miscellaneous, sir. That's perfectly right. So here, they give a column to you, a set of items. Reasonably presented, what is not able to be fit. Very minute items you need not spend your time. Put under the any other expenses 1, any other expenses 2, anything. But not filling up anything at all. All the 18 items, main items you are leaving. Straight away you are going there and punching that any other item. It's not fair. Okay? You can educate your client to say that, sir, purchases major category. Some capital items, some other big items are there. Just give the detail properly. Then the balance item can be under the any others. Because others is having its own zone. Others cannot become the main zone itself. So that way it will be there. Yes?
The department issue notice for the mismatch in the HSN.
That used to be there, sir. We can always convince. Honestly, I am telling you. See, my learned brother's question is, sir, okay, you are telling that what is a good practice. We will try to follow. But the bad client is there who is not permitting us to do a good practice. And I am punching that with the available data. If I give such a kind of inadequate, incomplete data, what is the legal effect of that? One is the question. Legally speaking, we can present the data and say that these are all the data, even after 1 year or something like that. And we can say that maybe without much knowledge about this presentation, he has given that no wrong intention. Everything is there. His purchase is there in your GSTR 2 itself. His sales is there in his GST return every month what he is paying. And the audited figures are there. There is no wrong intention at all. Perhaps it's an inaccurate presentation. But the exchequer is not going to lose anything at all. What is big thing happened there? So a bad officer can go for a general penalty of 10,000 rupees each. That's what maximum. Just because of that, they cannot go for a wrong assumption that you suppress the income, your income escape that one. That cannot be the case.
If all are coming under 18%, it may not make any difference.
Yes.
Some are coming under 12.
Yes.
Some are coming under 18.
Naturally, sir. In those cases, and all, tax itself you are wrongly presented. That is what HSN is going to be wrongly presented. There is an intention clear. Sir, 18% is one category, sir. You are consciously placing it under 12% when you filled up the para number 4, para number 5, maintained that as 12% itself. That is what you are presenting in HSN in para number 17 and 18 there, and you are presenting as 12%. It is not about HSN wrong presentation. It's a conscious presentation of an item under 12%. Matchingly, you are presenting a picture for that in HSN also. It's a clean case of separation. That is totally grossly different one. What?
Purchase is 10 crores.
Yes, sir.
But you have sold it to 15 crores.
Yes, sir.
Certainly, because of HSN, certainly it is.
No, that's what I'm saying. No, a clustering. Even my learned sister was asking a doubt about the monthly one, which is mutandis something here also. A logical presentation will make you to believe as a child about that. See, this fellow has purchased a tour doll for 40 lakh rupees. Opening stock is for only 2 lakh rupees. He has sold for 4 crore rupees. Whether it's tour doll or whether it is gold, how he is able to sell for this? The code is not matching. You will easily understand. Broadly, when you are doing it, a minor trend setting is always there. Purchase for this, sold for that, purchase this, sold this, purchase this, so it will be always there. You will be convinced. Such a presentation with a minor variation is not punished by anybody at all in the department. They are not disturbing you at all. But when there is a conscious misrepresentation, both in the turnover also, tax also, to match to the story, HSN is also cooked and presented, then actually they will say that the presentation of HSN is not my problem. From HSN I got a hint. From that I get into the story. There I am able to see that you are not able to, even now I am asking you, okay, I am just setting aside this problem of HSN for a while. You please present what you purchased at 12, what you purchased at 18, what you sold at 12, what you sold at 18. If you are able to establish a fact, I can classify this as an inaccurate presentation without any kind of intention. I will even drop the penalty also, not a problem at all. Check this show to me. This is how they do. A very bad officer will be, at an extreme, will be trying to go for a penalty under the case. But the case where conscious reduction in the presentation is there, conscious suppression is there in the presentation, it will warrant a trouble. We cannot avoid it. Right? So this is all about GSTR 9. Go to the 9. Please, if anything is there to be asked, please.
So let's assume that the turnover is below 2 crores.
Sir.
Wherein the GSTR 9 is not mandatory.
Yes, sir. Yes, sir.
Okay, no, sir.
Yes, sir.
So let's assume I have missed out some exempted sales.
Yes, sir.
So in your experience, is it better to file GSTR 9 and show that sales or just leave it like that?
Yeah, that's what in the starting point itself we told. you will be having a number 2 crore rupees in your mind. You would have filed for 1.93 crore rupees basically. You might have honestly missed out, maybe due to some honest reasons. Some amount of 17 lakh rupees of interest on income tax of some year, past year is coming to you. You missed it. 1.93 crore rupees presented with perfect tax liability, all done. If the 17 lakh rupees had been presented, or to have been presented, 1.93 plus 17, 2.1 crore rupees will be your real liability. Then you will be an assessee crossing that prescribed. You ought to file your GSTR 9. You present it. When you are going to file that one, I gave an example also. There will be a number 0 in your exempted turnover. You will go and punch even 50 paise, the same number I told you. 50 paise also, it will be showing you a red color box. It will warn you, don't worry. You just punch honestly your 17 lakh rupees, which is not going to cost you anything, and complete your responsibility of compliance. In a very rare case, maybe only under 65 verification or maybe 67 inspection, that time when they are coming there, they will ask you file something and your GSTR 9 is reading something, they will continue with it. Oh, income tax refund, get me the copy. Oh, fine, okay, right, that's all. GSTR 9 you file, it's clear. But if you don't file, they will be coming back in future, if you don't file, they will say that this is missed out. Because you have to give reconciliation. It is missed out. Now we are adding it. Then why did you not file your GSTR 9? Sir, I did not. Sir, in your GSTR 9, the monthly return, if you are not filing, is it giving a kind of qualification to you to shun the GSTR 9? You missed it. It's an error. An error is not giving you a kind of qualification to skip a compliance in this case. So, advisable in your case to see that, please add it. Don't bother about the red box. Perfectly fine, let it be. You file and continue, you will be satisfied that you are compliant with. Rarely the inspection parties may be asking what is the detail for this one. You will explain, they will drop it. That's not wrong.
In textile goods,
Sir.
CPE is purchasing at 5% tax.
Sir.
As per the HSN.
Okay.
But the department says it will come under 12% HSN.
Okay. That we need to see the specific goods, sir, actually. Generally speaking, the 68 chapter, 66 chapter, 62 items, 61 items are all falling under the 5% generally. There are a lot of items where specifications are changing there, and very detailed presentation has been given there, whether it is a left closure and a right buttoning or right closure and left buttoning. To that extent, it's very clear. And wool-based or normal goods items, it is also there. A separate category, whether man-made linen or general item or cotton, is also there. Whether percentage of goods 30% is involved that as poly, cotton or normal is also there. A lot of classifications are there. We have to get into that and freeze it actually. But by and large, it is better to see that personally we see the goods or the video and decide the goods. It is not advisable to on the basis of even a pamphlet is not that much satisfactory to decide the rates actually. Now in our practice would have always recognized this. The very serious work what an advisor or a chartered accountant to give in GST will be relating to rate, but very casually that is what is given there, which is highly dangerous. Please don't give any opinion writing orally at all on the rates unless you personally touch, feel the goods or see that what kind of function or things of the goods, and because much often there is a habit of the customer when you are picking up your phone, sir, are you driving? No problem at all. There is one good and that is calling at all over phone, everything over phone. And after 3 years time he is coming, sir, in the month of November on 29th when it was hugely, the wind was very high and Menjal was coming there, Penjal was coming there, you had been driving the car, I gave a call to you, you also confirmed. We don't know. So let us see that these are all serious matters actually. As far as classifications and rates are concerned, please avoid opinions in writing or otherwise also unless you have seen the goods. They will come and simply say one liner. Sir, mic sir, what is the rate? Which mic? Sir, mic is mic sir. No, color mic? No sir, normal mic. Normal mic means what kind of item it is. We have a stem and then made of that one and there is a cover bush. No, not that one sir. Basically the handled one, whether it is wire connected or not. Sir, too much details you are asking sir. I am asking about one mic. Not that good. It works out in a totally different way. So let us always try to see that whenever somebody is asking rates, because as my learned brother says, you decide and say some amount. The department is having his own, he has got some data, we don't know where from he is collecting, what inspection he has done, we don't know. He says having some other data. Today, now this guy is coming, sir, you only told the rate as 5 sir. You orally told something, I orally told something. He has physically verified and excellent cooperation was extended to him. On that day, on that day when I told you, can you send a photograph? Sir, small matter, sir. This we can immediately say, you are an expert, sir. I am an expert, that's okay. By God's grace, you are also accepting. Fine, okay. But whatever be the expert, I may be an expert doctor, but without seeing the patient physically, how can I give the treatment? After all, you have done FRCS, MBBS, FICS and all. A small thing, after all, a small gallbladder surgery. Why are you not deciding? How can I decide? Only after seeing the patient, I can decide. That's all the case also. Unless we see the goods physically, the related documents, agreements, clearly studying that one only we can tell. Really speaking, that is a very larger work. Comparing to any other work, sometimes it takes, honestly speaking, a trainee in your office will, out of what I can say, enthusiasm, in 5 minutes will come out with a classification. A middle level manager in your office, reasonably trained by you, will be coming after some 15 minutes time. Other way around. A real professional associate with you sometimes will take an hour to decide a particular category. It's the right way. It's the right way. No, sir, too much study there, so got too much confusion. No, not so. There are several cases wherein it will be appearing to be so resembling something, but naturally something else is dangerous. So we cannot take that risk. In your case, sir, you take up the goods into your control, sir, and see that what is that, and then you decide, sir. 99% they will be wrong, sir. You don't know. They don't know. But there is all possibility of information coming to you will be different, and what they have physically seen or verified may be different also, sir. My suggestion will be better take up the goods physically, at least a videograph along with the pamphlet, then you decide, sir. That will be better.
Sir, for flavored milk sold by Avi,
Sorry, sir?
originally they charged 5%. Now the flavored milk is liable for 12%.
Of course. There is a change in that one actually. And contents also matters a lot actually, how they are placing it. It's told it has gone to 12% actually. But the contents, they have given some exclusions also.
Some not government undertaking is also a complete mistake.
No, sir. With all due respect, we are in a public forum actually. Much often the government entities are the biggest defaulters and confusers. They make a lot of errors and mess. Because all the time their working style is, sir, CPE has given no given. That's okay. Sir, CPE says clearance circular. It's okay. In his head office, he is writing something and head office suppliers come, head office suppliers. Head office is the only authority for him in the whole world. What he says is right. By mistake, he is typing that 4 plus 3 is equal to 27, he will be saying that 4 plus 3 is equal to 27 only. Because head office supplier is saying so. Hey, right from the beginning, for a long time it is only 4 plus 3 is equal to 7. It can be, sir, in our office, head office supplier has given. Tomorrow, see, only authority who is going to question me is my head office authority. He is going to ask me that 4 plus 3 is equal to 27 I gave you. Why did you violate? If I am doing 4 plus 3 is equal to 27, complete. My problem is solved. Actually, his concern is only to comply with so-called head office. So you should pray that the so-called nice guys who are sitting there in head office of that state government or the companies or organization should have good knowledge and issue the notice in time or circular in time. That is the problem what we are seriously facing. Now, before entering into the serious topic for the next, please. Sir.
I am trying to talk in terms of table. You have mentioned about Barrow.
Sir.
I am trying to refer by table A.
What is convenient you tell, sir. Please.
So in table A, we have filed along with the vendor's rejection is considered as a sales invoice.
Oh, okay.
Because when we send it, we are sending it with then 2B is net of credit note.
Okay.
So that conflict is what we have faced with the client.
Right.
So 2B is net of credit note.
Yes.
Whereas we have paid this so GSTR 1.
Okay.
We have filed the GSTR 1.
Right.
So when the reconciliation comes,
Sir.
so auto-populated 2B, it is 6 B1, B2, B3 the total.
Yes, sir.
And it doesn't take into account table 7, rejection doesn't take into account.
Yes.
Finally, it refers as excess claim.
Okay.
So by comparing 9 and I think when the query comes, we explain, and it takes a lot of time for the people to understand.
Correct.
So what's the procedure you suggest?
Why should not you take up 6M, sir? You can have that others column. There you can plan it. That is the reason why, because these are all sometimes we are not able to explain to machine. Not all machine we cannot tell. Officer himself is, as we rightly told, take long time to understand your worksheets actually. There are provisions wherein the other category, how you can present it, other reversals, how you can present it, the others are there actually. It's specifically, I showed you, maybe if time permits later I will come back to that and show you the slide. In red color I just showed you. You can use those.
The other reversal is there.
Yeah, other reversal is
so
there.
that is where
Yes.
You mentioned about 6 yam.
Yes, yes, yes.
I've been.
Yes, you are.
So, but I have won in all the cases.
Okay.
We are not paid even 1 paisa
Good,
for
good,
any of this
good.
matter.
Right.
What happens is, but what the best procedure that we have to follow is whether to give
Yes.
debit note,
Yes.
whether to write the invoice and file GSTR 1 or
Okay.
wait for the credit note from the party.
Yes, sir.
And to see that we take lesser credit.
Right, sir. The right procedure I can seriously tell, sir. As my elder brother asked a question, let us all keep in our mind one point which sometimes most of you would have known also. Sir, a GST credit note or a GST debit note never can be originated by a person other than the very supplier. These are all golden words. Please don't forget. A GST credit note or a GST debit note can never originated by any person in this world other than the very supplier. Who supplies that particular supply is the very same person who can give any credit note. Anything what you are doing from the recipient end cannot and will not have any logical, legal value at all. But for the financial debit note, but for the financial credit note, if any. So what you are supposed to do is you can always plan to see that if there is any ups and downs because of various reasons, maybe rate difference, maybe goods received partly, or some goods are not up to the mark, or you are returning and quarantining and returning some of the goods due to the specification mistakes, whatever it is. When you are trying to do this one, you can always try to see that after adjusting it, you pick it up, it will be advised, because you can force the supplier to see that they are giving the credit note or debit note. Wherever rarely, because you try your level best, but it's all not so easily possible to educate everybody. At least educating your client may be easy, educating his accountant is very difficult. Educating his accountant is also easy, educating the supplier is very difficult. Educating the supplier's accountant, of course, impossible. So that's how it is. So there is all possibility of some gap in this complaints, what you are trying to do as good practice actually. In those cases, no options are, please use the others columns only in the year end. That's what you can plan it and present it. During the year, you can always believe that I am a recipient. Whatever I do, I am not going to get any kind of logical support to me. Only this guy who is who is the origin of this menace should set right. I will force him. Whatever be the angry or disappointment one is having, he should just try to pour everything on the supplier to get the records of his side and see that it is coming there as a part of our 2B so that we will be safe. That is the only right way. Other things are all temporary, sir.
Because of when it is above 50,000, we have to raise e-vehicle, we have to, all those issues are there. We have the fear of it to be stopped.
Yes.
So we are forced to send an invoice.
Okay.
The rejected item, we send as an invoice, has to be the procedure. So, and we have to ask them not to give credit note.
Okay.
Take the credit in his input.
Okay.
It looks like that is what, anyway, let us...
Yes, no, I seriously understand, because we have gone through all these matters in the past year. This is very good. My sincere advice is you cannot take up the role of a supplier unless it is forced on. My sincere suggestion is force him to give the credit notes. You can just send the e-way bill as goods return. There is a separate column for goods return. You click it and send it. It is without disturbance. It will pass on this one and reach him. Force him to give the credit notes. That is the right way. In a rare case, out of 200 transactions, 10-15 escaped, and it did not match well or something like that, then those cases you can try to do.
Sir, on accountant told,
Sir.
target has been fixed for each officer.
That's
so they are issuing notice.
No, that's a half truth indeed, actually. Half truth. They have a kind of pressureful work, sir. In that cases, that happens sometimes. But what I can still tell is, much often their notices are issued without understanding the facts of the case. If somebody from Hyderabad is preparing and giving and they are just loading it, server is generating, they are signing with a digital signature. In single day, 247 notices given by one small assessment circuit. Single day, 240, how sir? 247 DAC clicking and password typing itself will be end of the midnight. That's all it is. Now coming to this one. See, these are all little serious points. After seeing this for next 4 minutes, we'll go. Very serious actually. After for 4 minutes, we'll see. Then we'll get into the core topic. Sorry, please.
respect to the amendment which has come in table 8, they have changed from GSTR 2A to 2B.
2B, yes.
Now, what happened was, in this reconciliation, the GSTR 2B contains data for the tax financial year.
Okay.
And then we are dividing the input tax credit which is taken, which is coming from table 6. And then again we are taking input tax taken in the next financial year.
Okay, okay.
So if you see, it's like A minus B minus C. So of course there will be a difference there because GSTR 2B will not have data which is taken in the next financial year.
Yeah, okay, yes.
Earlier it was 2A and 2A will have a data which is taken. So that is like dynamic in nature and
yes,
2B
yes.
is a static in nature. It will not change.
Yes, it will not.
So in all the claims which I am filing, it's having a difference.
Okay, okay.
So how do we resolve this? Because that table 8A is always subject to scrutiny.
Yeah, of course, of course.
So how do we proceed with this?
As you observed, table 8A of this will be a final one actually, because you will not have the cases of belated matter and all entering into that. It will not. Something like a 2B. That is the reason why 2B is reliable, because 2B is static. It will not be so varying one actually. It will be standard. Here, having taken up 2B as a reliable basis, it has got its own negative points also, where number one, as you rightly told, it will not be able to show you the past matters and all. It's of exactly to 1st April to 31st March, exactly to be able to present whatever has been presented by the suppliers. Beyond this, what we are presenting is, as I was telling you, the other columns maybe, or the 6th column, the other point is coming there. The financial year of this year taken credit used for next year. There is one column I showed you in a green color screen I was showing you. That column, these are all helping you to present. Difference will come, sir. That's why when I was carefully telling that in 9, you would have noted, you will not required to touch anything at all, but in 3 to 4 places, 3 in specific, 4th is optional. 3 to 4 places you have to touch, then only your 9 will be filed, I told. One among the places this, another 2 places also I just showed you, but these 2, because in this place there will be definitely some difference. There you need to present to see that in other column, in the import column, or yeah, somewhere you have to touch. Then only, or end of the day, whatever is excess there, in case of your case is shortage. In case of excess, ineligible I did not take, available but I did not have, somewhere you have to touch, then only it will get fulfilled. Or else your paragraph finishing is not going to happen there.
So, but in my case, it's like SSE has taken in the next year. But when I filed GSTR 9, it implies that it's like elapsed.
Okay.
So, you know.
No, what you can say is, this is the amount, there is one column I just showed. I think now if I am going back, I need to change it. But at the end of the session, I will just show you. You please remember, I will come back to you. There is a specific column I told you. Even in 9C also I will show you. During the year it is there, but next financial year only it is taken. That's what will be coming there. Current year I am not taking. It is there, reflected. But next year only I am going to take. It will show. We will just reconcile it. That also. See here, being tax auditors under income tax or statutory auditor in income tax. Say for example in 3C. You are giving all these things in para 11. Hope you will accept it. Sensitize your client. Say I am tax auditor. I am doing work seriously. It is me who is giving a list clearly. Cash book, bank book, journal, ledger, other else, this, that, everything I am just listening. In future when the GST inspection is happening there, don't come to them and say that I don't have tax register, I never maintain this. I don't have cash book. You cannot say. Because it is my report which will be disturbing. Very simply. See, we are honestly complaining and conforming with some other person. It is confirming something to the other department. So there is no point. There is a stock register not maintained. See, in GST law, stock register not maintained, it cannot be a stand at all. You have to, it's mandatory. But having seen that we have verified, we cannot take a stand otherwise also. Similarly, there may be a question saying that whether under section, you forget about this, under section 37, I am saying some other part. Under section 37, you make some disallowance. Personal expenditure disallowed. Directors, club expenses, something like personal consumption of employee, CFO, when they are here, so disallowed. You do something. You are not to believe that this will be the basic input for the GST department also. Because this is not relating to business. For income tax, if you say it is not relating to business, naturally for GST also it is not relating to business. If it is not relating to business, it is not eligible ITC. From your own report, for some other purpose tax report, client should not come and cry that, sir, you reported something, they collected the tax report, I was making fun of them. Hey, stupid fellows. For GST department, they are coming and doing audit, taking the income tax, they are not stupids. They are trained. They know what they are doing. So they collect tax audit report, there are some 17 serious points where they can pick up the points for them. Serious, very serious. From your own reports. I'm just showing the major items only. Maybe if cost audit is applicable there because of some, say for example, some media company, somebody is falling under this category of more than 50 crore rupees turnover. Cost audit is prepared. You say yes, they cannot say no to the department. It's getting recorded. You have seen it. And similarly, you are presenting clearly that on accrual basis the company is operating very well. Or if there is some kind of negative comment is there, just safely you are putting that. But for the invoice on so and so, otherwise it is under the, something you are writing. It is an input for the department. The department is going to say, sir, it's fine. You are writing very clearly for income tax department that this is the point what you are writing. That is okay. Right? The income tax department did not see that. We don't know. Under cash it did not come. You escaped. Fine. Okay. We are not bothered whether 143 has affected you or not. We are bothered about this. There is a point for us from your tax audit report. We are picking up. It is possible. Similarly, you are just saying that events occurring after the balance sheet date. You say that so and so revenue is pertaining to 23-24, but it could not be done there only for some reason. This that. GST department is going to say that whether time of supply is attracting within the 31st March or not. We are bothered about that. Your income tax provision is accepting something you wrote or you did not write. You wrote and they did not raise the query. That is a different. That's a different issue. Time of supply has come. So I am able to see that you are giving this data extra. Your para number 13F I am following. Your tax audit report is my basis. So I am possible. So try to see that you are sensitizing them. Similarly, para number 14 of your tax audit report. You are giving the stock details. Old stock, not rating, not matching, is that the stock book is not there. So many things you are presenting it. Whenever you are presenting it, please tell them. Or if you say that stock detail not available, tax audit report. And incidentally, you are having a detailed tax audit stock reports for this purpose, some inspection is happening there. Their portals are linked, one to one they are able to verify. The department in a deeper scrutiny from income tax also can ask that, what sir? In GST department they are able to furnish stock records. You are saying that stock records not verified. Sir, really they did not. Okay, fine. The auditor himself was not given the records. That's what we are believing it. That means that there is something else there wrongly in the stock record. For GST department it is available. For income tax auditor it is not available. So something is wrong. Bring the records. That's a hint where from they start. Maybe something can be wrong. It's a good guess. Yes, but good guess. Right? Then, take for example these cases. Here the revenue, you say that it is not credited to the P&L. Reasons are there. You are justifying the reasons from a different perspective of the Income Tax Act 1961. That's fine. But what you are saying as not credited, whether can be accepted as an item not falling under the supply or not, is a different question. You say there is a credit, but I am not seeing in the profit and loss account. It's okay for me. That is from one angle. The same reply should be there from the GST department also, which you cannot guarantee. They have time of supply, they have place of supply, they have supply for the purpose of section 7. They will decide whether it is going to be there. Please remember when you are presenting this. You say capital receipt, they are not bothered about capital receipt, revenue receipt. Receipt is receipt, that's all. For them, advance receipt is okay as far as service is concerned to tax. So that's how it is. Right. Similarly, you go to para number 21. So you present the details. The details relating to personal expense, that's what I say. Advertisement expenses, personal expense, so many things you are saying. These are all disallowable. You say, at least these are all very explicit, please get it disallowed. Let us not take chance. You have to get a good refund, don't make mess. Let me present it, it will not come under cash also, I know very well. Reasonable parameters we have seen, all are fine. Some of the errors are there in your labor payment relating to PA, PSA, which are all disallowed. 3615 I just studied, I just gone through, fine, okay. These are all the things. The small amount is there. Section 224(10) of income tax will take care. Small income, you better operate. These are all fine. And I am making a small list. All fine. All justified for that law and your practice. When you do that one, please remember, as a GST auditor or GST advisor, you have something to tell. This can also be a point for them to deny the ITC relating to this. Is a question what you need to consider. Next. Reverse charge on import of service. You say some reporting under section 195 TD is deducted by you. These are all you are presenting. When you are presenting those things, please tell that man whether you are giving the GST advice or not is a different. Say, my job is income tax audit. 195 I am presenting. 195 is warranting you to deduct TDS 15 CACB issued. All this fine. Okay, 37 DD rules. All fine. Okay, I have done my job. As I am presenting, there is another department, GST department, which is interested in this. When they see these deductions under 195, they are going to ask you question that under section 195, what you imported? You deduct TDS. Naturally, it will not be goods. If you are importing goods, then there is no question of 195. So you are importing services. What services you imported? Which service you imported, then still believe that that import of service will not be warranting reverse charge. Performance based outside India, what is that? Give me. Question can be there. It is your report which is originating the query for GST. Your tax audit report, you are reporting is creating queries for GST purpose. And take for example the amount admissible under inadmissible under 43BH. You give a presentation, that's all. That gives an idea to the department of GST that, oh fine, for MSME a specific part of the carved out part of the creditors payable is listed here, right? Why should not be a case of the 16.4, 16.2 violation actually? More than 180 days somebody has not been paid. He is a creditor supplier, MSME supplier. His credit, this company is enjoying. Why should I allow that credit? Sir, get me the list. Where from you get these doubts? I did not get doubt at all. Your tax auditor has presented his report. I just saw that. From that I got some kind of flash. I'm just asking. Get me the report. This is also possible, right? Then here you are presenting the ITC. When you are giving the details of the ITC with the books and details, much often it's advisable to see that whether it is matching. If it is not matching, necessary notes you can put. Or else there will be unnecessary confusion raising that what is as per books, what is as per this one, what is the gap in that one. All will one after one start. And you can try to see that the kind of prior period item, debited or credited, whatever it is, when you are doing it, they are able to see that one, what for it is spent. What kind of expense, whether it is of this year, if it is of previous year, whether to be reconciliation need to be revisited. That time if it is 2 years, they will be worried much actually. So these are all the points what you may take into consideration. More than anything else, notes. The board report and notes give wealth of information. What is a director's remuneration paid, they say. Then naturally the question is coming there, sir, director's remuneration 194J, okay. Why did you not pay your such? They start in this way. Where from you are getting these points? Your own notes. I did not ask anything at all. It is that in your notes only. Where we are not asking anything special. You write a note that there is no contingent liability. However, there is a big fight between me and the ex-supplier who has not done that. The liability is even not necessary to be treated as contingent one at all. You are writing something else. He is like, oh, this supplier. Then how do you claim that IDC? You say that the goods are not being accepted by you at all. Sir, where from you are taking this? Your own report, your own notes, sir. You are only writing. Thought. Right? So, let us understand and sensitize the client also that, see, for one law, in one way, if something is told, may be good for that law, may not be good for another law. So, we have to strike a balance. Don't blame me. My work is this. When I try to do it, I am trying to balance. Don't blame me. Just because you are doing a GST audit to some other person, don't blame me. Just because you are filing some GSTR 9, sir, you did some presentation in your... I do my work. It's my work. If you are asking me advice, I can say these are all the areas where I am doing this and it will affect you, right? If you are asking me, I will tell. But whether you ask or not, please be sensitized. It is not my work to see that I am giving hint about you. I am doing incidentally, my work is this, and again incidentally it is coming out in a different way. And wherever it is possible, you try to sensitize them. Let them take some corrective actions so that they are not blaming us. Now, sir, GSTR 9C, 9 itself I was able to get a broader idea. 9C, it will be just a supplementary for that. I will easily understand in the next 25 minutes easily. Fine, okay. But before going to 9C, sir, honestly as a practitioner, can you give me a simple list? I don't want a very complicated list. Very small, straight list. Sir, take care of this when you do 23-24 9C preparation. Your own 9C or the 9C of the client. What you would like to say to me? Say something to me. That's all. What you see in screen, if you understand and then proceed, you are safe. Not that it is very exhaustive. I can honestly say. I think it's exhaustive. That is different. But it is quite reasonable. Relatively, it's comprehensive. Post sales discount. As I already told you, please read section 15. Recognize the importance, appreciate the importance of presence of an agreement which is prior agreement. On the date of or prior to the date of invoice, there should be a bilateral agreement between the seller and buyer. Agreement naturally should be in writing, not necessarily in stamp paper. You know, white paper bilaterally signed is enough. It should be there. Second, small complaints. A reference to the agreement so made shall be there in the invoices if you want to ensure a post-sales discount later. That's all. That's all. Literally that's all.
For regular purchases and sales, there are no agreements.
No, regular is okay, sir. If you are intending to give a post-sale discount, I won't decide what I am going to give as a discount. Depending upon the volume, depending upon the relationship, depending upon the number of achievements with me, what you are going to do, maybe by the end of some year end or something, I will decide. If you decided that already, it's naturally that. Any program will be, in mind will be this. That cases, a post-sale discount can be effective only when there is a prior agreement and a reference to the agreement in the invoice. Otherwise, it will not stand. Please don't litigate unnecessarily. You can litigate, that is okay, but time loss. Businessman's work is to do business, not to litigate. There's no point in wasting the time in litigation. So that you can clearly tell. Regular, see, other point and all I did not tell. Sir, your goods have short received, price credit note, did not meet the specification, price credit note, rate difference is there, negotiated and settled, trade credit note, that is not a problem. Post-sales discount 3% for the year 2023-24, when in the month of June issued. Post-sale discount in the year 31st March, religiously we are sending a note. For all the transactions of this year, 2.5% you are, where from it comes. It won't reduce your liability as a supplier, though you are giving a credit note to the opposite party. It can always be a financial credit note, it will not reduce it. Only when you have these two simple compliances properly, it will officially reduce your liability. Opposite party also has to reduce his ITC claimed by him to the extent what you are giving as a PSD credit, post-sales discount credit. Creditors written back. Let's be aware. Sir, creditors in your books are written off or written back. Either of this. So, if you are writing back, it is not a serious transaction in the GST law actually. It's not an income or something like that. But remember, when you are writing back, the GST yield is readily waiting. Did you pay to your creditor the sales value, that is their sales value or purchase value, and the GST only, then you are eligible to take the credit. If you write back and very clearly, explicitly say that, please remember and recall, what have you done in respect of this person's ITC? You are writing back, you are officially telling that I am not going to pay him, I am writing back. When you are writing back, you are accepting and explicitly telling that there is no payment of value fully or partly. When you say fully or partly I am not going to pay, then you need to know that what is the repercussion of the ITC thereon. Then, creditors paid after 180 days. Make this point very clear, sir. In case of private limited companies, the aging list is very clearly reading. A guess is easily possible. 1 year, beyond 1 year, then the list is there picking up, they can easily compare and understand. So please sensitize the client to see that this point is serious. Beyond 180 days, at least you are paid. Okay. Then when they are finding out, they will ask the interest. Okay, get out. If they are not paid at all, serious. Not at all paid, you are finally seeing. Serious. The ITC is going to be reversed. ITC on structural construction activities. You can always say that, no, sir, we do have case laws. Orissa High Court has told that for construction related matter, we can take credit in case of a mall and this one. It has gone to Supreme Court and returned also, sir. Safari Retreats Private Limited versus Union of India. Yes, dispute is there. As I told in the consultation stage, disputes are not good guidance. Disputes are a firefighting arrangement actually. Fire has come and you are fighting it. Fire prevention is grossly different one. Here what I am suggesting is, today the law is reasonably clear. In case of structural additions, repairs are okay. If you are debiting your construction work, sundry works and then debiting your P&L, it's not going to add any capital assets. That is not warranting any kind of ITC denial and ITC reversal. It's okay, you can take it. I am talking about some works contract which is creating the structure, second floor, third floor, fifth floor, back side, front side, something you are adding. When you are adding it, physically a movable property comes into the existence. You cannot take the credit. Section 16 is not giving you the allowance for that.
17 is preventing it clearly. So that you can just take it up seriously. Related party transaction, year-end journals, debits or credits are enough, not necessary to wait for real payments. That's what time of supply reads. If you are a related party, maybe a holding company, subsidiary company, this, that and all, those cases and all, you can always believe that your debit or credit is fairly enough. Transaction is done. Time of supply is clocked. So that will be attracting your liability as a supplier or maybe reverse charge means as a risk. It's that. Please remember when you are passing the year-end journals, just remember that this is attracting the liability. We cannot wait for a long time. Then the forex payments already explained you, maybe import of services will be involved. Foreign exchange you are paying, goods are not imported. Then what is imported? Service. What else can be there? And naturally, except a performance outside India in a specific class, all will be attracting reverse charge. Then, expenses attracting RCM not paid within 60 days. What is the seriousness of that one? Sir, law is ready to wait for 60 days. You engage a lawyer, sir. You have to pay him, he gave a bill. He went to the case and appeared. Again, nobody is believing. Sir, you did not pay to one advocate and he all the way went to the court and appeared. How, sir, it is possible? That's the nice part of the advocate's profession is that actually. It will be, it need to be taken up rightly actually, not the other way around actually. If you don't pay, even a jobless advocate will not go and appear in the court. That's how they have been trained by their seniors. There is a serious responsibility for the elder members here in our profession to teach to the youngsters and the juniors what is the importance of fees in time. Unless we educate, the next generation will not know this. Again, they will also follow their own style of work and they will be waiting for the fees by raising the bill in the current year and collecting the bill in the next year. That too only when they are coming for the next year audit. Grossly unfair. Atrocity. Right, coming back to this one. So, you engage your lawyer, he went there and appeared. He gave the bill, you did not respect the bill, but he was very honest. Went there and appeared in the case and won something for you. His bill is with you. You accounted it, maybe TDS also you deducted, but did not bother to pay him. You know very well, lawyer will be making you to pay the reverse charge. You did not pay at all. 60 days, 70 days, 80 days. When I ask the client saying that, no sir, you have taught me very well. Reverse charge liability will be coming there to me when I am paying, not at paid. When I pay to the lawyer, I will pay to him. The reverse charge also I will pay to the government. Not so. Lawyer may wait, law will not wait. If 60 days gone, 61st day, by default, the RCM liability will come to you. You cannot wait. Law will not wait. You did not pay, that is different. It will come. There is one government liability, you are just accepting it, but you are fighting with the government or delaying that matter. Government department is, as usual, is slow. You are recording it and you are not paying it. 60 days you have to pay the liability. License fees accounted, but you are not paying it. You will be liable. Security accounted, but not paid. You are liable. GTA accounted, not paid. You are liable. 61st day is dangerous. So RCM is coming to you even if you don't pay the payment to the concerned supplier, causing you RCM on you. Right?
So will it be GSTR 9 when we what we missed out in monthly returns, and we pay in GSTR 9 and take the credit?
You can. So, now there are some provisions recently introduced wherein self-invoicing can be there within 30 days, please plan it, they say. So at least in the 23-24 that gap is there, you can plan it. See, only one prevention is, serious prevention is, when a fraud case has been booked on the opposite party and then you are doing the RCM on him fraud case. On this you are doing it, or if somebody is finding out. Once a fraud case under 74 is on you, whatever RCM paying will not help you. 73 case at least okay, non-fraud case. 74 notice is dangerous. Responding to my learned brother's question, sir, I pay now and I take credit. Sorry, 23-24. You can fix it somehow. And in the current year, they have changed a lot of changes. They have brought in the RCM liability register created separately. What you pay and what you take is tracked separately. All stories, and they have given the specific time limits also for this. 30 days time only self-invoicing. Plan it, do it. If he is an unregistered supplier, he will not give invoice, or he will give an invoice which is useless. You are a registered recipient. Raise the invoice properly. That's how it is coming there. So you can plan it. Expense stock written off. Already explained to you. Writing off a stock is directly causing reversal of ITC relating to that. Sir, writing off is causing or loss of stock is causing? Both are same for them. Stock writing off is also same. Stock loss is also same. If you are reducing the value also, they are saying that you are reducing the value, proportionally reduce it. Sir, absolute item, reconsider this, sir, that's all. Nothing doing. Amortization, nothing doing. Amortization, apportization, nobody is bothered. So that's how it is doing. And GST credit note issued and financial credit note issued, let us recognize the serious difference between that and this. GST credit note can be originated only by the real supplier. No other person in this world can create a formal GST credit note except the GST supplier only. Right. 9C. Sir, I am told that 9C related matter I have to check. First of all, 9 there is a question I cannot. First of all, 9 itself I am not clear. Whether it is 2 crore more or not, what should I decide? Already somebody asked a question and I also twice told the matter. First of all, you bother about the 9. There you ask this question, 2 crore rupees or not. That is the question relevant for 9. For 9C, only when you are touching the 5, you are going to think about 9. Aggregate turnover on a pan-India basis, we are going to think about it. Not this. So, 9C related discussion will not have any question like this to scratch the head about 2 crore rupees or not. 2 crore rupees or not is a question relating to 9 filing. Crossing 2 crore makes you to file 9s. If you are not crossing, there is no GSTR 9. There exists 9. That is all about 9. When you are talking about 9C, forget about the 2. Whether you are crossing 5 aggregate turnover or not is the only question you have to ask. That way you can think about it. Here. Now, when the turnover during a financial year is exceeding a particular limit prescribed for this purpose, 9C is subtracted. 5 crore rupees already advised. They will be going for this. This is the old provision that, okay, next stream now. Well, then you don't have to go for any chartered accountant certificate, cost accountant certificate. You can file your 9C on self-assessment basis. That is what has been amended now. Who is the registered person? 254, we already discussed, section 25 registered parties. Right? Then, what is the turnover? Because they use the word only turnover in section 35. They did not use the word aggregate turnover and all. But prescribed limit is the word that they are using, then we will be referring to section 80, subsection 3 within short time. Now, whether it is aggregate turnover or only turnover, they use the word turnover but linked to the word prescribed. So what is prescribed? We need to go to the rules. Why should we go for rules to understand the word turnover? So always Act is there to say what to do. Rule is there to say how to do. Everywhere, anywhere. The Act is saying that who will be liable to do 9C. That's told. How we are going to implement a law. Then it is saying that under Rule 83, it is saying that this is how we have to do it. Right. So now whether the turnover is relating to a particular state only or whether it is everything. For all these questions, answer is in only one para. If you read this, all questions will be answered. If still something is left out, I am going to show you in some next 3 slides. Especially if you just focus on the white colored text, you get a reply for everything. To whom it is not applicable, very clearly told. The TDS party under section 51, TCS party under section 52, casual taxable person, non-residential taxable person, input service distributor party, all will not be troubled by 9C. Nothing is there, no 9C, both nothing. Then when, okay, other than these people, outward supplier is there, what should be the turnover crossing 5 crore rupees? What turnover? Aggregate turnover crossing 5 crore rupees. What is aggregate turnover? All India, pan-India turnover is that under a single pan, whatever turnover you are having in any state to be added. If it is crossing 5 crore, you file in all the states, whether in that particular state it is crossing 5 crore or 2 crore is not a problem. Consider the gross turnover, aggregate turnover, national. Once you decide, and the response to the question is, yes, I have crossed 5 crore rupees, you decide that I have crossed 5 crore rupees. Whether I am having 5 lakh rupees in a state, I should file 990, yes. I am having in a state more than 2.5 crore rupees turnover, I should file, yes. I am having nil turnover in a state, should I file anything? Yes. That's also yes. No question about that, right? That's how it will be. And what is the due date? 31st December. Right. Here. Aggregate turnover, we already discussed. Short point is having the same pan, under the pan, whatever be the number. That is what is aggregate turnover. That's all. registered person, section 2, subsection 94, we already discussed. Section 25 says that in every such state and union territory, he has to go for a registration. Once he is crossing the turnover and he is going to have a transaction, then when you are having in every transaction state the registration, naturally it will be warranting GSTR 9 complaints irrespective of your turnover in that particular state. A quick checklist before you get into the 9C. Just tick these points and then get into the work. Whether all monthly return filed. Very preliminary question. If one is not filed, delayed, March itself is not filed, these are all not workable at all. So go and give some damages to it. Settle it and do it. Of course, in this era, such a long period will not be there. After 9 months, somebody will not be having something not filed. Or filed is, one is filed, 3B not filed. Not possible. If you are not filing 3B of a particular month, next month the one will not be open. Very simple. If you are not filing one of a particular month, that month 3B will not open. Again, you know. So, take care that 12 months are there, worksheets are there, annual return GSTR 9 is filed, then only you can open 9C. 9C will not open if you are not filing 9. Click 9, file, after filing only 9C will open. Whatever you do, without filing 9 it will not open. Worksheet for the annual return, what you have prepared for 9, which I told you, let it be full-fledged. See that you are completely finishing your work in 9 itself. 9C is only for reconciliation purpose, but that is highly advisable good practice. In an emergency case, good case, genuine case, you can pardon and try to do this violation, go for 9 filing with some wrong numbers or not perfectly prepared reconciliation, but risky. You have to pay with interest and you have to face the notices also. If the client is ready for that, for the sake of avoiding the penalty of 25,000 or something, then you can advise. Scanned financial statements are must, which is supposed to be state financial statement. A particular state's financial statement is must. You may be having consolidated. It's not going to help you. Sir, they are preparing only nationally. They may prepare nationally. That's okay. He ought to give you the state financial statements. It cannot be avoided. Sir, should it be definitely audited? Highly advisable to be audited. If it is not audited, in their personal risk, they are filing their own internally prepared state financial statements. But state financial statement is must. Please sensitize, educate the client. So there, whatever I am saying, they are not listening. Say ours is ERP, 3 states are there. It will come together only. Shoes are purchased for our legs. Legs are not cut for the shoes. Simple. It's after all shoe. ERP is after all a shoe. Make it to give you a financial statements of the state. A trial balance of a state, if it is not giving what kind of ERP it is. It's not a case of ERP at all. Right? Then.
Is it specified somewhere in the Act that it should be a state financial?
Yes, yes. See, how they are trying to present is, the form when I am opening you will see, para 5A, as per the financial statement it will start, relating to the GST number. So that means that for the, what GST number you will be having, sir, in GST state, only for the state you will be having GST. For Andhra, Karnataka, some other number you will be having. So you are forced to have the financial number of that particular tax paying unit actually. Naturally it is compulsory. That's what it is. The short points what we need to see only can be clustered into this way. Reconciliation of gross turnover. This is what precisely we have done in the GSTR 9 also. Reconciliation of tax paid. Naturally, once we have done completely the 9, you will be having the figures. Maybe this is the highlight. Reconciliation of ITC. Again, if you have done perfectly the 6 preparation, you would have been ready for this also. In fact, you would have found out the short payment if any and paid that amount also with the DRC rate 03, you may be ready also. Auditor's recommendation on additional liability. This is coming there and it is an auditor's time actually. If not, you are going to offer it on your own that still I have not paid this amount. If anything is left out in the 9 also, you are going to present it and accept it. In this entire process, these are all the major items we are going to do, which is nothing but a repetition of 9. Then you are having a first question, sir, then what for we are filing 9? You say, if you have perfectly filed on 9, you need not bother about 9C at all, it is going to be repeated. When after all 9 is all the time perfectly done, where is the need for 9C? Perfect. Your question is having its answer also. Sir, you are a perfect gentleman, you are a nice CA, you have prepared perfectly the GSTR 9, there reconciliation itself is not there. Sir, there is one bank account, there is one bank book maintained by you. Whatever is there in bank account, I don't know how it happens, incidentally, perfectly is accounted by you The bank is also clearing instantaneously whatever you are depositing or issuing a check, and it is matching. End of the year, your balance is matching with the bank balance perfectly. Then you are asking that, what is the need for the BRS? There is no need. Exactly what is there will be repeated again. What is deposited? Here also deposited. What is paid? Here also. What is given and here also. What is the bank charge? Here also bank charge. Naturally there will not be any BRS. So is the case of here. But practice is not that good. In practical life, every time more or less you are required to prepare a BRS. Because bank is going in a different direction, you are going in a different direction. Naturally there is a need for BRS. So is the case of here also. When perfect 9 is there, without any query, then it will be settled. But perfect 9 itself is difficult. Where in the 9 stage itself we will be finding out the short payment, other things are all payable. That payable you need to present with a reasoning. Where to present with a reasoning? In 9 you are not having place to present. You are punching the number and accepting the liability, creating the payable more and matching the paid with the payable and closing it. You have to tell somewhere, there should be a space for you that this is what the reason for me to commit more liability and paid. Where is the space? Here is the space. So there will be some variation with the monthly return versus 9. That variation would have been settled by you in 9 itself also. But there should be some space to tell. This is what is providing the space to explain what is it. The next 15 minutes time, we are going to discuss about the format and the important points in those things. See, this is what the form. This is a typical form. This is how it will be. If you are going online also, you can prepare. Offline preparation is a little better for easy preparation, tracking and all. It will be better actually. From there you are preparing a JSON and going to load it. Nothing wrong in preparing online. If you are very confident about your worksheet, you can go online. I'm not saying no about that, but it's a little risky. So the turnover, see, you can clearly read the word. The turnover, including exports, as per audited financial statements for the state or union territory. My brother asked me a question. First line, I told you, para number 5, A. 5A paragraph will come, I will tell, I told you. This is what the word. But see that it is forcing you to tell that, Baba, what is your turnover in your state? Tell me. As per your financial statement. It is starting with the financial statement. We are starting from here. Financial statement based turnover is what? We are going to end up in 5Q, the paragraph next slide. There we are going to end up as per GSTR records, what is your turnover. So the travel is from the financial statement to the GSTR. In between, whatever you need to add and reduce, it is permitted. The additions and deletions, if not causing you any liability, you are hero. If it is damaging, then you need to pay that amount. That's all. So the story is very simple. You are having a turnover of 100 crore in your financial statement of the state. I'm using the word state because there is a possibility of multi-state client. If it is only one state client, you forget about it. State is also same and national is also same. That's all. But coming back to this one. There is one turnover declared. That turnover is coming here. Turnover. This is involving nil rated inside the state, exempted inside the state, non-GST inside the state. Everything is there. So it is, what is your turnover in that one? That's all. There are some questions where it is making you to add and reduce respectively. I will just show you the better screen. First we have a look on this one. Next. Have a look on this. I will explain these things around. You are ending up with turnover declared in the annual return GSTR 9. This is the number what I was showing you in column 5 of that one, paragraph 5 of that one, where I said that we are ending up with this number. This number will be referred there in the GSTR 9 because this number will come there. So we need to match how we are traveling and reaching this. To reach this number, what is the difference? Sir, if your financial statement is reading exactly what is there in GSTR monthly return and in turn what is there in GSTR 9, there is no reconciliation. Top, you write the number. Bottom, it is auto-populated, matches, close. There is nothing to fill up. All fine. Very difficult. So many reasons are there where in practice we are having some explanation to be given, adjustment to be done. You have accepted certain things. So many things are there. That is where the reconciliation is coming into the picture. Just few examples for reasons. I am not saying these reasons for everything. There are so many reasons are there. You can have a look on this. So many reasons. I tell you, there is no end at all. Even 10 reasons, 50 reasons also there. Why a number is varying in your financial statement something else, in your GSTR 9 is something else. If it is varying, whether it is causing you liability or not, is a different question. If there is a liability, whether you paid or not, is a different question. Now, why there is a difference in the turnover? There are so many reasons. I missed out this revenue, I wrongly presented this revenue, a credit note was missed by this one, supplier is presenting the next year, I presented in the next year, I made an amendment next year, I gave the credit note next year, I received a credit note next year. So many errors, so many corrections are there which will cause the difference. These are all the reasons. This column is given there, column number 5 is given there. To read that, what are all the reasons? That's why I told you, there should be a space to express, even if you are corrected that also, there should be a space to give you a reasoning, to say that why it is. It is nothing but a BRS, something like a BRS. The statement itself is a reconciliation statement, is the header. 9C is a reconciliation statement. 9 is a real return. Annual return means GSTR 9. It refers to GSTR. This is a reconciliation statement, it's an appendix part of that actually. Having filed the 9, along with that it will also go. 9C is not having per se its own character. It is an addition for that one. If you say 3CB, then comes 3CD along with that. If you say 3CA, 3CD comes along with that. That's what it is. The audit report is having that. It's an annexer or part of that one. If you say main statutory report, CARO is annexer to that one. That's what it is. Internal financial control reporting is annexer to that one. That's all. Your report is your report. What you are making out of 143 is a separate report. That's what meant. What is audit report? Audit report, you will mean only that. These are all annexes. But definitely forming part of it. No doubt about it. Now, here, turnover including the exports. As per audited financial statement for the state, you are starting with. So, from this, the journey starts. Your adjustments are coming there. Every line item, what is added or reduced makes difference. I just showed you a long list. Perhaps it may not be so readable actually, because the form's clarity is that much. That's why I'm showing you here. Income is relating to previous year, but no invoice raised. Previous year means even the financial year, you can just think about it. But if you are not raised invoice, is it okay for you? Maybe okay in other law to prove for various reasons, including the kind of negotiation. Whether in GST law can you prove this? If he is able to prove that service completed, supply completed, gone, your liability comes. So please plan well that whether this is settled by you or not. So there is no revenue of that kind of a target. If it is there, know that and then do present it, because number matching is different. See, why this is warranted first of all. So please remember, you can always ask, why should I tell this matter at all to a department? You have to tell because you start with a real number declared to the whole world in a financial statement. In a financial statement for some other matter in a different perspective to comply with the accounting standard, to comply with the generally accepted accounting principles, you have presented the income already. That income only you are reconciling. When you are reconciling, only when you say the reason you will reach the GSTR 9 figure. If you don't say the reason, you will not reach. Even if you say the reason, side effect can be there, tax under GST. So unadjusted advances can be there, which may attract the GST also. So at the year end it will be there. That is a possibility. When you are writing the reason, please be clear that whether you are writing what we are meaning is right. You please plan. There will be some assets sold. There will be some kind of related party transaction. Principal versus agent or vice versa. These transactions are also there. Import of services. All the things are there. You can plan to see that what kind of presentation is this. Is it anyway or deemed supply for the purpose of maybe 148, section 148 purpose? What is presented by you? Is it really a deemed supply? Whether it is presented well, because it is not matching on the particular date, how it is coming there. A financial statement need not perfectly match with the GST's style of presentation. Need not. I am not saying that must not. Need not. Sir, you have an accounting standard 7 based income recognition. Let the sun rise on the west can be possible. Never your AS7 standard based turnover recognized by you will be matching to the turnover what is there in your GST return. Never, ever. The past 20 years the department people are trying to understand really what is AS7. Even then, still there are some officers who are even continuing their sincere study of learning. What this is that? This is a big puzzle indeed. You are accepting there as a debtor, they are crediting, their debitor, and the income is coming. That income you are not offering to us. Why you are not offering to us? Sir, that is a deemed income, sir. Why are you not deeming here? Sir, that is accounting standard. Then why that accounting is not helping us? Sir, that is meant for income tax purpose, sir. It is no way really income is there. No, why my time of supply is not coming there? Your time has not come, sir. Your time is coming the next year. That's what I can say. Right? So, that is what is going. And the credit note raising, somewhere you raise a credit note on 15/4/2024, say for example. The transaction is relating to, let me say, January 2024. Well, within 6 months it is raised, nothing wrong in that one actually. Effectively, what is your turnover? Your turnover reported is something else. In April, you are punching this, relating to that turnover. How it is going to affect it? Your financial statement will not be bothered about it sometimes. In the bigger picture, it will not bother about the credit note falling after the end of the year. But your GST turnover need to be presented because you are linking to that actually. Naturally, your financial statement is different. Your 9C is different. So when you are presenting it, there is a need for serious reconciliation. There, these paragraphs are of some use by adding it or reducing it. I already discussed with you regarding the discounts. Proper formal discounts will be ending up in a proper credit note. If it is improper, it will be ending up only in the financial credit note. Your payable receivable may be affected, but not the GST liability. It will not change at all. Because it is affecting only the GST related matters. If not, it is not going to come there at all. So, unbilled revenue, we already discussed. 2017-18 matters, irrelevant for us. Credit notes and adjustments, already we discussed. Can I have a look on this? Section 15 adjustment. What is the Section 15 adjustments? You have some pure agent receipt. Your financial statements will recognize that as an income. Maybe a shipping industry, freight forwarders, carriage and freight forwarders, customs, CFS, CFA, customs association, CHA. They are having a practice. Huge money they will collect. All on behalf of the client they will spend. Then this is taxable, this is not taxable, this is pure agent, all will say. Whenever this fellow is claiming as pure agent, officer invariably say you are impure agent. No, I will not accept. That is wrong, this is wrong, you made a margin. He is trained to show what the poor officer can do. You go to him and say, sir, there is one exemption, sir, please. No, sir, there is a notification issued by CPE. No. Sir, there is one circular given by your own department. No. Sir, your commissioner has issued a trade notice and instruction letter to you people. No. Sir, you are an intelligent officer, sir. No. What for he is saying no, he doesn't know. He says no. What to do? He is having, as my brother told, he is having his own target, what he can do. He is a nice officer, but he is not able to independently work, apply his mind. Coming back to this one. So, Section 15 adjustments are there. Where there may be pure agent concept can be there, government subsidy can be there, which is not forming part of the value. These are all to be adjusted there, the space is given there. So, there you can reduce it for the purpose of presenting it. You can add or reduce it is editable column. In para 5M, 5MN, 5O, these are all the editable areas. I am going to show the screen also. This is a foreign exchange fluctuation. See, you have financial statement, foreign exchange fluctuation, foreign exchange gains, you will credit. We have to see in our financial, in your GST returns. Because that itself is a year-end entry, what you planned and finally you passed. After discussing with an auditor in 3-4 rounds. It will not find place in your GST return. Possible. So how to present it? Same thing was there in the GSTR 9 also. If you have presented it, it will come here also. If you are not presented, you can present here. If you have missed it in a hurry or something, you can present it. Any other reason. Dangerous, but it is there. Sir, in my financial statement, I will accept that as an income. What is it? I will accept as an income. For your department, I will not accept. You are directly banging on the face. You are confronting the line in the pen, clearly saying that there is a reason. For the whole world, I will declare this as an income. For your department, I will not declare as an income. You are clearly saying this is the reason. So what can be that kind of reason? No, so many reasons are there. So many reasons are there. See, for example, a standalone basis financial statement is there. You have a lot of stock transfer between you. For a state, from the state's angle, it's a transfer outward. It's a sales. For a company, in an overall manner, it is not sales. Because here, purchase from A branch, the sales by B branch, it is merging and it is In a consolidation, it will go away. There are all possibilities. What you are seeing in a financial statement is grossly different from the angle of GST state-specific angle. So there is all possibilities that you can present it. I already told you, 5Q is the one which is coming after all these adjustments. We started in 5A as per financial statement of the state. We end up in 5Q after all the adjustments. As per the GSTR, what is the figure? Adjustment. This should be declared figure should be matching to this. The 9, what you arrived at perfectly, if it is all done perfectly, 9 itself, it will match. If we are not done, it will not match. That is why all the more plus minus is required. If this is done, see, if 9 is perfectly done, you will not have the column unreconciled annual gross turnover at all. If your 9 has not been prepared properly, in emergency or urgency, if you have filed it with your wrong number, the unreconciled annual gross turnover will come, you need to give the reason. Still, even after so many reasons have been given there in the columns itself. Having given in the reasons in the column itself, how do you have a unreconciled figure? You have to say. The reasons you have to give. These are all the reasons for which I am giving the reasons. So there is one para 6. That para is reading out the reasons. You can punch and type anything what you want to, and with a sufficient supporting record in your hand in future to prove that the reason mentioned by you are correct. And here, reconciliation of turnover by the tax system. See, there is a list. In this list, you can see that having started with the annual turnover what we reached, we are removing these exempted, nil rated, zero rated, without payment, all the amounts for which we are not having liability to pay. When you are removing all these things, what will be the thing? Gross turnover minus exempted will be ending up with taxable turnover, is what it is. Which is already there in our worksheet of 9. We should perfectly, very easily be able to do. If we are not able to do, our 9 is wrong. That's why already when I started to tell, prepare 9 with highest seriousness, keep everything prepared, finished, identify the short payment of tax if any, wrong availing of ITC if any, late payment of tax if any, all you do. If it is possible, please pay the DRC 03, settle it, close it, keep it. Then enter into 9C, smooth journey will be there. If not everywhere, there will be a difference of this kind and you need to explain to that. That's a problem. Then 7G, same screen with a minor difference I could show to you in respect of 9. Same thing better. It all get auto-populated if everything is perfectly presented in 9. You need not do anything at all. Perfect. All will be matching, you can just finish. If you have missed in 9, you have to make a lot of arrangements here and reasoning you have to mention in every place. That's how it is. Same thing we saw, but slightly in a different way. I told you that please keep your rate-wise worksheet in your hand. Be satisfied with the summary effect of this one saying that paid by cash, paid by ITC, to arrow I showed you. But I consciously told you, please keep that rate-wise because you will be having this as a good support when you are preparing the 9C, is what I mean. In para 9, what you are doing is nothing but the result what you have identified at the time of 9 itself. If you have failed to do a good 9 related reconciliation rate-wise at that time, now you will be working out and there will be some kind of new error you will be finding out. When you are finding out new error, you have to commit that I am sorry I have missed it in 9, I am paying now. That's all. So again it is justified that a good 9 will save a lot of time to you. Emergency 9 will allow. This is something like this. A planned surgery will not be causing any serious blood loss. Whereas an emergency surgery will be causing a lot of blood loss. That's all it is. Now, here, previous. Here the total rate-wise tax, it is admissible. This way, rate-wise, that way, amount under the category-wise. If you are matching it, criss-crossingly, it should be matching. It's not all mere numbers. They are good in numbers always. You can easily match it. If it is not matching, it is a good hint for us to see that somewhere something is missing. You can cross-check and come back to it and then still settle. You can present this very easily as to the nature as well as the rate actually. Then, sir, I tried all these things. Still there is a mistake or error. That's what, as I already told you, something missed out in 9 is causing you a liability now in 9C. with reasoning. Reasoning is what? It is a liability. While it through DIC 0 number 000 dated 2/12/2024, the above mentioned amount has been paid. That's what you have to mention. Then, here balance payable, if any, you need to be liable to pay that and you need to be paying it. Reconcile the ITC. We already discussed in detail in 9. If your work done perfectly, that what is taken, what is ineligible, what is available but not taken, what is in 2B, what is not presented but I am eligible, I want to claim under others, right? What is reversed, 37 reversal, 39 reversal, 42 reversal, 43 reversal, any other reversal, all of that. Done everything perfectly, then you will be reaching the same ITC eligible, ITC available, matching. If it is not done at the time properly, here we will be having the differences. There you need to present it. A plus B minus C. That's how the count actually. In this category, ITC availed as per audited financial statements. It is starting with audited financial statements. That's why I already told you that in your tax audit report you are mentioning the ITC opening balance availed during the year, less central tax credit during the year reversed or utilized, closing balance. This is what is there. Don't treat it so simple one, because the related worksheet, if it is perfect, it will be helping you in 9C. That's what I told. That's what I did. You keep your book and this in such a way that only for the March month. Why only for March month? So naturally in the month of March, you will take credit enthusiastically by 31st March itself. But your e-credit ledger maintained in the GSTN network portal will be showing you or allowing you to punch and claim the credit only on 13th, 14th, 15th, 20th of the April 2022. That could be the only difference between what your books are showing as taken credit and what the GST credit register is showing there in the website of GSTN portal.
In case of clients who are having a turnover less than 10 crores, there's no need for tax audit. Then in that case,
no, I'm just saying that.
Since it is given in the form and just.
No, see, this is saying that as financial statement, which means that audited financial figures. So you are having a balance sheet at P&L. They are talking about your books actually. They are not talking about IT return or tax audit report. Your books are there. Less than 10 crore, less than 5 crore, also whatever it is, you are maintaining a book. As per your book, what credit you are taking. See, they are not talking about as per your e-credit ledger. That is not. That will come later. That how they are adjusting, reaching out to the figure is different one. Table 7, how they are matching. They say as per your regular books of accounts, what is your credit. That's where they start. Then they allow you your ITC got booked in early financial years, claimed in the current financial year. They are allowing you. See, as per your books of accounts, you are taking credit of that one. They try to make that plus and minus for you, relating to the previous year, but claimed in the current year. They are asking you to subtract relating to the current year, subsequent year only is claim is happening there. So if you are doing this plus and minus, naturally your book should show some credit what is equivalent to the one what is there in the e-credit ledger also. That's what you have to plan. This is what is 6. See, just now I gave an example. In the March month only, a perfect book should give you a slight shake actually. Because every month you are taking, in credit register also you are taking, in books also you are taking. In credit register also you are taking 11 months figure, if you see exactly it will come here also. The 12th month only will be a small gap. It is pertaining to the current year, you claim in the next year. Not next year. Calendar month wise next year, but relating to the current year return only. That's how it will become there. So that's how it is. If you are arriving at that one, you will be able to see that this figure is matching. Even after this adjustment, if your books are wrongly showing some number, that is unreconciled. You made this plus and minus. Current year credit, next year I am taking. Previous year credit, current year I am taking. Plus it, minus it. Reach the number. Is it matching with your GST return? No sir, still it is not matching. There is something wrong. Why your book is reading something as ITC and your so-called GSTR 9, which is auto-populated after all from the 3B figures, is reading some other ITC? Explain. By way of this explanation, you are going to give some clarity to the department that why your books are reading something else. That's what. Now, already I told you, whenever you are giving these details of this one, let us justify that the last 2 line items we are using sparingly. Let us try to fill up whatever major items, then we will go for any other expenses. Straight away going to any other expenses 1, any other expenses 2 is not advisable. Now, having said that one, the reason for difference between 9 and 9C, if there is anything else, we need to see that what is payable. Maybe because of taxable turnover wrongly told and tax missed by us. That is one liability. ITC wrongly taken, which is not eligible for us, which we committed and then confirmed it, that may be. These are going to be the liability which will be coming there. It will be added when the paid is reduced, naturally it will come as payable. Then you will have to pay. Then only the reasoning will be closed. So that way it will be closed. This we already discussed. GST audit per se is not there in law, no doubt. Now it is not there in the past for 3 years, 4 years. But really what you are doing in the preparation of 9C is a GST audit. Preparing GST 9C can be done by an accountant. Honestly, presenting a GSTR 9C can be done only by a chartered accountant. So you do a serious work of analyzing completely the financial statement versus GST, the full records, ITC eligibility, nature of goods, rate, whether the classification is right, so many things you do. And then you arrive at an annual health checkup, you are doing it and then concluding with an 9C. Then the audit fees, what you are charging, be justified. Because this often why it is suggested from my side personally, at least or professionally, you can, if you permit, is there is a need for respecting the profession. We are mortal, today we are and tomorrow we are not going to be. It's okay. Profession is going to be there for all the time. It's immortal. The profession is having a big name, respect. The legacy what your forefathers and my forefathers as chartered accountants gave to us, who are unknown to us, unrelated to us, blood related to us, is the one which is giving the respect. On the first day as a chartered accountant, ACA, when you go inside the income tax department, today inside a GST department, when somebody is knowing that you are a chartered accountant, your respect comes to their mind. It is not the one what you earned. You have to earn your respect hereafter only, or after all the first day ACA. Are you a CA? I thought you were a college boy. Come, sit. Chartered accountant, please sit. That respect is coming there because of the legacy of the profession. So that is a big respect. Let us see that the assignments are taken up more seriously by us. We are giving the best. See that it is compensating. If not, the problem here is a senior member will be able to forego that kind of small figures. For him, 1 lakh, 2 lakh rupees amount will be a small figure. The problem here is there is an set of youngsters who are coming to the practice. If we are not taking up as seniors that work, because that is small fees, that would have gone to another person and they would have charged the right fees actually. If it is done little seriously, my humble request is do seriously. It will be good. Let us form some kind of opinion between us that what will be the right charges, what is the training there. You can always check with your peers who are in the field, how much is to be charged for this and try to see that reasonably, because you are working seriously. It is not nothing, nowhere no CA has raised a bill meaninglessly. There is no history at all. The wrong bill raised, irrelevant bill raised, unduly raised. We never do that at all. We raise a bill with the highest honesty. So my humble request is you can take it into consideration, because there is a need for us to sensitize the client that what is seriously required in this matter. It is our responsibility to say that these are all the things required, that this we are doing it. Without this will be becoming erroneous. That's what we have to plan and tell them. So that's why it is. Now if there is any question to respond, left out anything, we'll be happy to respond to it. 9 and 9 is a related matter. So if there is no question at all, there can be 2 meanings.
Sir, everything you explained, there is nothing to explain further. Yes.
Sorry.
One thing. Please. No, there is one savior for me. Yes, sir.
Table 12.
Yes, sir.
9C table 12.
Yes, sir.
So,
please.
So I would that's what the most critical line, reconciliation. But,
this particular part? This is 14, here. This is starting from the financial statement, sir.
Here, the fourth line, ITC availed as per audited financial statement.
Yes, sir.
Or books of account.
Yes, sir.
This auto is opening plus minus is auto.
Yes, sir. There, from the top, you can just say that is A. A plus B minus C is the number which is coming there.
So it's a net figure.
Yes, yes. That's only arithmetically it is calculated.
So I was interpreting that word ITC available as per financial statement. ITC claimable as per the financial statement. If the word should be there. That is point one.
Yes.
Then ITC claimed as per annual return, that is okay.
Yes.
There is no question of unreconciled ITC. The balance should be our debit in our books.
No, debit in our books, that you have to say that, don't ask me this question, it's only a debit in my book. That's what we are supposed to say. What they are trying to mean is, given that everything is normal, your book should be matching to your e-credit ledger. Why it is not so? You have a different figures in your books as ITC.
No, sorry, the difference is on account of, we have received the material. The party has not filed the
you can explain.
Maybe it's not reflected either within 3 months or 6 months, even after 9 months.
Yes, yes.
That debit, how long you can carry means
some logical time. Yes.
Otherwise, you have to take it to rates and taxes.
There's something like that. Exactly.
So, if the unreconciled ITC instead of that,
yes.
It should be within bracket. It should be available as per books of account if the word is there.
Don't worry, sir. You have a reason column, sir. You write. You are the king, sir. In the para number 13, in the next para, you say the reason it is not unreconciled at all. I am eligible. I am keep. You write, sir. See, for technical matters, they are using the common word in everywhere. When there is a difference, it is yet to be reconciled. That's what they say. The reconciliation doesn't mean that we are on some faulty side. You bravely write, sir, as you wish. This is nothing wrong. I am keeping this. It is going to be used. I have not claimed anything wrongly. You can say, not a problem.
Okay. Next, 14.
Yes.
Table 14.
Yes.
So table 14.
Yes.
We used to have 3 columns.
Yes, sir.
That is ITC, claimable, what is claimed, so like that.
Yes.
So I consider this is the most critical element of GSTR.
Correct.
What you missed in 9.
Yes.
So you have to be doubly critical on this 9C table 14.
Exactly.
This
True.
is what I want to highlight.
True. That is true. Fully agree with you, sir. Because that column, how you maintain is, you are trying to express that this is what the credit I have taken, this is right. If you are going to just present little wrongly, then you are giving a very clear hint that I have missed somewhere. This is how it is. So need to exactly match your worksheet matters a lot.
Right.
Yes.
Okay.
Agree, sir. So thank you very much for your passion. Thank you.